All right. Hello, everybody. Welcome back to another episode of Market Close, of the Market Close. We are here. It is Tuesday, January 20th. We ended up getting a red day, folks. We ended up getting a pretty ugly red day. S&P 500, when I left, was down 1.2%. We are here down 2.3%. Look, it's ugly. Certain sectors not necessarily feeling the pain and ugliness of this, of what's going on in the markets. Some things have rebounded. A name like RKLB, which has been holding the 90s very well, 7% down on the day, 99 all the way to 88.75. So that one definitely took an ugly hit. IREN down 6%, NBIS down 7%, Salesforce down 2%, PLTR down 1%, D-Wave down 5%, CRWV down 4%, ORCL down 5%, NVDA, for whatever reason, down 4%. But then you have names like Intel that are holding on, 3% up. Bloom Energy, 1% up. IONQ, that's up. DJT, although it was up 6%, now it's up 1%. That's still up. The broader S&P 500, though, the market is down 2%. This is the first time, I believe, since November that we've had a 2% down day. We have not had a 2% down day in a long time. Shopify right there, down 7%. And this is why today, and today is very emblematic of many days where you end up getting a gap down and then a reversal. We were down 1.7. Then we ended up only being down 1.2. A lot of people thought, all right, this is the time to buy. This is the dip. And then it ended up being a complete head fake as you can see right here, about 1 o'clock started taking a dip downwards. And we fell that extra 1 percentage point, 2% down now on the S&P 500, which is affecting all the large caps as well. AppLovin, that's down 1% on the day. Meta, we are still above 600 at 603, but I mean, we are obviously very close to going below 600. Tesla fell off a cliff, unfortunately, 418. Tesla was at 443 last week. Now 418, that's down 4% on the day. Google, that is at 321, down about 2%. Amazon, I think, is below 230, just at 230, 230.8. And then Apple right here, 244. I have not looked at Apple all day. My goodness, Apple down 4% is weird. You would think this would be a little bit of safety. I guess the market's thinking that tariffs are going to affect Apple in particular. I really did not look at Apple all day. That is ugly. Microsoft, or at least holding 455. Microsoft exactly 455. That's down 1%. The VIX is up 31% on the day. So we are getting a pretty volatile day, which makes sense for why we are seeing the action we're seeing. Now, last time the VIX was up this much in a day, it ended up being the bottom. I don't know if this ends up being the bottom. Small caps right there down about 1.2%, but 30% move on the VIX. I mean, is it peak fear? Maybe not, but it definitely feels like more fear than not. We are at neutral. We are not at fear on the fear and greed. We were agreed last week. Wow, Broadcom down 5.5%. I didn't even see that either. But there is your fear and greed at neutral. Now, why is this happening? Obviously, we spent a lot of time this morning and last night talking about it. Trump continues to double down on wanting to acquire Greenland. Here's some comments that he just made in a 1.5-hour press conference that he did celebrating the inauguration, and he went over the accomplishments over the past year. This is some of the stuff that he had to say.
I think something's going to happen that's going to be very good for everybody. Nobody's done more for NATO than I have, as I said before, in every way. Getting them to go up to 5% of GDP was something that nobody thought was possible, and pay. At 2%, they weren't paying. At 5%, they are paying. And they're buying a lot of things from us, and they're giving them, I guess, to Ukraine. That's up to them, but they're giving them to whoever they're giving them to, but they're buying a lot. I think that we will work something out where NATO is going to be very happy and where we're going to be very happy. I think something's going to happen.
By the way, I meant to say VIX is up 40% year to date, not today. If it was up today itself, that would be a little crazy. But yeah, VIX is up 40% year to date. So as you can see, Trump continues to double down on these statements of acquiring Greenland. And, you know, not much has changed since his comments from 3 days ago. But I guess the markets finally reacted. I mean, it was kind of, you know, it's kind of weird. The markets didn't really react last night. You were down a little bit. It was whatever. Then in the morning, we were down a bit. Then we kind of recovered. And now I think you're finally seeing the brunt of the reaction from the markets. And, you know, they're starting to price in kind of how this played out. I mean, it got to a point where Trump even had this moment with one of the reporters earlier today.
How far are you willing to go to acquire Greenland?
You'll find out.
How far are you?
I mean, when you've got Trump saying stuff like that, you'll find out. Obviously, the markets are pricing in a lot more uncertainty around what's playing out. Shopify right there down 7%, S&P 500 down about 2%, RKLB right there down 7.3%, Salesforce down 2.9%, BMNR. We will have technical Tuesday in a little bit. Also, we got Netflix earnings that we'll talk about in a second. BMNR down 9% on the day. MicroStrategy down 7.5%. Why? Because Bitcoin down 2.5, loses 90,000 for I think like the 5th time today. And Ethereum, I think we lost 3,000. Yeah, just below 3,000, 2,997. We've got Netflix, Ibkr, and United after the bell. I'll put a poll right here in the chat to see which one you guys think outperforms. I don't have a position in any of them. Kind of wanted to play Netflix. My gut is that it pumps, but I don't have the energy to actually make a trade on it because I mean, today's a pretty ugly day for the markets. It would not surprise me if all three of these guys dump. So which one do you think outperforms? Got Netflix, Ibkr, and UAL. Now, one of the stocks that's actually up today, to my surprise, Grab, 453 up 3.4%. Two reasons for this. Number one, international stocks are all up today. Mercado Libre was also up, as you can see right there. Well, Mercado Libre just went red. Never mind. That was up in the morning. That went red. Nubank, though, did get to 1730, so that's up 2%. So maybe the market's just saying, hey, we're going to go to different parts of the world because we don't want to be stuck in American stocks. I mean, it really is surprising. Usually Grab goes with the NASDAQ algos, but the fact that it's going the opposite, I think, is very interesting. And it's a pretty bloody day, dude. 2% on the S&P 500. Grab should be down like 5%. I mean, just given the price action I've seen for the stock over the past year and a half, that's usually what happens. So it is kind of encouraging to see it go the opposite direction. The other argument is their equity stake has increased by about $500 million. They took a stake in a bank that's part of their GFin services. That bank went public today in Indonesia, and Grab owns about 40% of that bank. So that IPO is now being factored into an unrealized gain that Grab has on its balance sheet, which is a pretty sizable amount. I mean, it's pushing $1 billion. Yes, $770 million on this position. So maybe the market's excited about the fact that the cash pile continues to be pretty strong. They also got a couple upgrades today. But Superbank Indonesia is up 83% today from its IPO. Grab owns a lot of that bank. That's one of the pivotal banks inside of their financial services part of the business. And that could be another reason why the stock is getting some momentum, but I don't really trust it, dude. If the S&P were to fall another 1%, I don't know if Grab's going to be able to survive that, but it is nice to see that it's up 3% on the day. ZETA right here, also flat on the day. Adobe, 1.8% down. Broadcom, look at that, 331. ASICs actually took a bit of a hit. I think AMD was up because Meta potentially is getting to buy more AMD versus build their own custom chips. AMD right there, 231. That's still holding on flat on the day, even though it was at 240 at one point, 231.96, but it's not going down the same route as NVIDIA. NVIDIA, I can't really explain why it's down 4%. I guess when the S&P falls 2%, the stock that comprises 8.5% of the index has to fall with it. But NVIDIA right there is down 4%. Now, gold and silver, I think, have held up throughout the day. Silver is flat, 94.15. It was at 95.50, so down a little bit. Gold, 47.52. That continues to make new highs. That's up 1.58%. And unfortunately, this freaking 10-year keeps spiking up. We hit 4.3 at one point. We're basically at 4.3 again at 4.289. So what is the takeaway from all of this price action? Quite frankly, I think there is no takeaway other than waiting. This is the worst day for the S&P 500 and NASDAQ since October 10th. Wow. That stat just came in. I thought this was the worst since November. No, October 10th apparently was worse, or was just as worse as what we are seeing today. I think we are all very confused. And why shouldn't we be? I mean, if you bought the dip early this morning, it wasn't really the best dip to buy. Now, maybe everything reverses tomorrow, but it's tough to ask people to eagerly buy this dip, not knowing what Trump is going to do next, how Europe is going to respond, if our treasuries end up getting dumped by our biggest allies, which is something the Europeans hinted at today, multiple different European presidents. And, that's not a good thing either. If big tech, large cap rotation continues to be ugly. Look at Microsoft, 453. Why is Microsoft getting sold off? I don't think there's a fundamental reason for that. I don't think the same thing for Apple, but large cap continues to get sold off. And obviously, if you have a very long-term horizon, you DCA on these dips all the time. But if you're trying to get a little bit more particular entry prices on that are very specific to what you're going for, then it's a little tough to easily get excited to buy some of these dips just because you don't know what's going to happen. I mean, tomorrow we could have a reversal, or tomorrow Trump doubles down and we fall another 2%. Zeta right there at $20.13. Palantir tried to push above 172. That's now at 168. As that goes red. Bloom Energy, that's held up. Intel has held up. You've had some names that have been okay. OSS, I mean, the fact that this is even up 2% on the day, quite incredible. Did not expect that one as a small cap to hold up. Even Micron, it lost 381. So a lot of buyers are probably pissed off if they bought in those 380s, expecting it to make a move to 390. That's now 365, but that's still up 1% of the day. SOFI lost 25.50. That's down. Broadcom again down 6. Amcor 49.17. That's up a little bit, but this was at close to 49.50. So that one is still down. Even Enersys was at 172, now 168. So a lot of names taking it on the chin. Corey right there down 5%. Applied Digital down 5%. And then your IREN and Nebius is also down as well. ONDS recovered well. Yes, that is also true. ONDS right there, as you can see, 1303. Now, this was at 1425, but that's up 7%. The drone theme continues to be very well intact. I mean, even Red Cat, which is not as popular as an ONDS, 18 million in volume today. That's up 5%. So the overall drone ecosystem continues to get momentum. The thematic themes that have been in favor continue to somewhat be in favor, but obviously the broad majority of the market is taking a hit. S&P 500 down 2% right there. Japan 10 years also spiking up today. Yes, their 30 years also spiking up. It's not the best to see. SanDisk up 10% on the day with Micron. We heard the Micron CEO talking about the memory super cycle that was continuing to be pretty massive. And again, the takeaway is it's hard to buy the dip on names that don't have such a specific form of momentum around them. Like the data center names have momentum, but they don't have as much momentum as the drone stocks, which is why Nebius and an IREN got hit today. So should Nebius and IREN be down 9% today? Probably not. I mean, there doesn't seem like there's a fundamental reason for that. But if NVIDIA is going to fall and the S&P is going to fall, then those names are going to fall with it. And the question becomes, do dip buyers really step in with not knowing what's going to play out? And by the way, I think a lot of people have stepped into it. You had plenty of people buy the dip earlier in the day. It just, the dip ended up dipping. And it might end up becoming a much more serious dip if this plays out, or we might get a reversal. But I think a lot of it depends on Trump, and no one knows what the heck Trump is going to say. Now, Netflix earnings after the bell, this is going to be really important. 87.62, Netflix getting a dump right there. Let me see what people said in the chat. 62% of you guys think Netflix outperforms. Put in the chat if you do have a position in Netflix or if you are playing the earnings on Netflix. My gut tells me Netflix is going to pump. I do think this one pumps. I think it's been pretty depressed. But then again, maybe there's a guidance number that looks ugly. Subscriber numbers maybe don't come out the best. I mean, I could see a host of reasons why Netflix ends up taking a hit. And that one looks a bit uglier. Wow, a decent number of people playing the earnings. We got 2 minutes until the market closes. Street wants 55 cents of EPS on Netflix and 11.9 billion of revenue. United Street wants 294 of EPS and 15.3 billion of revenue. Ibkr Street wants 59 cents of EPS and 1.64 billion of revenue. Netflix we should get immediately. Like usually Netflix comes out instantaneously. I don't think we're gonna have to wait at all. Ibkr and United probably gonna have to wait 5 minutes, but Netflix should come out pretty quickly. And then we're going to see what ends up happening. I didn't think we would start off big tech earnings like this, but we are. First 2% day for the S&P 500 since October 10th. It is ugly, but nonetheless, and it's getting uglier right into the close. Look at that, 2.2% down. I guess this is what happens when we try to unilaterally impose tariffs and acquire a sovereign nation. I guess time will tell if this ends up playing out in our favor or not. S&P 500 right there down 2.11%. We are going to see what happens with Netflix. Thank you, everybody, for being here. It is Tuesday, January 20th, 4 p.m. The stock market is now closed. All right, the markets are closed. S&P 2.03% down on the day. I keep forgetting today is Tuesday. I thought today was Monday. Today's not Monday. Today's Tuesday. But there you go. S&P is down. 2%. First red day to the tune of 2% that we've had since October 10th. Nebius ends down 8%. SanDisk ends up 10%. ONDS was up 8%. NVIDIA was down 4.3%. ZETA was down 1.2%. Bitcoin 89. Ethereum 3,000. MicroStrategy down 7. BMNR down 9. Apple down 3.4. Amazon down 3.4. Google down 2.4. Rocket Lab got hit ugly today, 7.4% down. AppLovin actually flat, but down a lot from last week. Shopify down 7.6%. Small caps right there, down 1.8 on IWM. Micron ended up flat on the day. Baba was down 2%. And then Broadcom down about 5.3%. Again, NVIDIA was down 4.3%. And the S&P was down 2.0%. Robinhood and Palantir, Hoodie was down 2.27%. And Palantir was down 1.39%. Netflix just went green, then it flipped red. It just went green, then it flipped red. 85.90. Now we are seeing the red candles. Went green to red. Let's see if that flips until we get about 2-3%. It's hard to officially say exactly if there's direction on this. Their earnings should be out already. Let's go to their website. Netflix. Okay, 12.05 billion versus 11.97 expected. That's a beat on revenue. It looks like it's trying to flip green. EPS 56 cents versus 43 cents. That's a beat. Those are a double beat on revenue and EPS. Still red. 86.50. Doesn't look like it has the juice to flip. A lot of orders coming in back and forth. So far, the street's taking her down 85. Oh, boy. Okay, let's see if she can bounce on that 85.50 level. Guidance for Netflix. Street has them at 76 cents EPS versus the 81 cent estimate. So it's a miss on the guidance for Q1. And then revenue, Street wanted 50.9. They're guiding on the low end 50.7. This is for the fiscal year 2026 to the high end 51.7. So they still came in on the low end of guidance, or at least the lowest end of their guidance is lower than what the Street expected for the fiscal year 2026. And EPS is lower than expected by 5 cents. Netflix now almost losing 85, 2% down. As we can see this one take a pretty ugly hit. It hit 84.90. Let's see if there's any chance of a reversal or if this one continues to go down. So they missed on guidance. Not aggressively, but it is a miss. United, they beat by 5% on EPS, 310 versus 294. EPS is down 5% year over year. Revenue's up 5% year over year. They beat on revenue ever so slightly. United Airlines is up 2%. United is up 2%. All right, so we got a little bit of a move on United with a beat on the top, miss on the bottom. Ibkr, oh, ugly, down 5. Why is Ibkr down 5? Dude, that's weird. They beat by 10% on EPS, 65 cents versus 59 cents expected. Revenue, 1.67 versus 1.64, beat by 2%. Revenue's up 17% year over year. EPS is up 27% year over year. They had that big stablecoin announcement last week, which pumped them 5%. I'm not sure why Ibkr is getting hit as bad as they are. Maybe that reverses. Ibkr now down 2%. It was down 4%, but that one is red. United is the only one up 2%. And then Netflix continues to get hit 2.9%, 84.80 on Netflix as she comes down. All right, I guess the street's not happy with Netflix. Let's try to get some coverage on it. Let me get onto the website as well, see what we've got. Again, guidance wasn't the best, but there's got to be some big the street is concerned about. Here's United, and then we'll get into Netflix.
So they beat by 16 cents a share. Revenue coming in line with expectations at just under $15.4 billion. Look at the metrics in the fourth quarter, and we're going to point out some areas where you're going to say, yeah, they're continuing to make hay in certain areas. Revenue per seat mile down 1.6% compared to the fourth quarter of 24. Cost per seat mile up fractionally compared to the fourth quarter of 24. An operating margin of 9%, roughly in line with analyst expectations. Free cash flow, negative $597 million. But then the revenue segments in the fourth quarter, listen to these numbers. Domestic revenue up 2% year over year. International revenue up 9.5% year over year. Premium revenue up 9%. And main cabin revenue up 7% year over year. Then there is the guidance. For the first quarter, United expects to earn between $1 and $1.50 a share. The street's at $1.13 right now. For the full year of 2026, United expects to earn between $12 and $14 a share. Currently, the consensus is $13.16. We talked about those revenue numbers, especially when it comes to premium and international markets. We'll talk more about this with United CEO Scott Kirby. That's coming up exclusively.
Okay, so United, some decently good numbers, which is why I think that stock is pumping. Netflix fell below 84, guys. Their website is not updated with the actual sheet, which is weird. Usually they're out pretty soon with the financials. I don't have it on their website yet. I want to read through everything they said. I want to look at their operating margins. But the guidance on Netflix is what the street seems to not be the happiest about. Yeah, they missed everything on guidance. It's a small miss, but it is indeed a miss. Again, EPS, you can see they beat paid memberships, 325 million. I don't know what it was last quarter. If someone can get that number, let me know. Operating margin, 32.1% for Q1. We got to get the balance sheet to see what it was in Q4. Free cash flow is going to do 11 billion. They expect ad revenue to double. Let's get some more coverage on Netflix, and then we'll see if we can get the actual data from their website on this.
A beat on the top and bottom line. The company reporting 56 cents in earnings per share. That's a penny better than expectations, while revenues of 12.05 billion, just ahead of estimates of 11.97 billion. Now, if you take a look at the stock, it's down. That seems to be based on some of the guidance. Wire's reporting that the company sees first quarter earnings per share of 76 cents versus the 81 cents that analysts had been anticipating, and revenues just a hair below expectations, guiding to revenues of 12.16 billion, pretty much in line there.
I have a headline. And this one's ugly. It's kind of reasonable, but it's also ugly. Again, kind of reasonable, but ugly. Netflix to pause buybacks to fund pending Warner Bros. Deal. Again, reasonable, because the amended offer today was all cash, if anyone missed that announcement. So they need the cash to buy the Harry Potter, which means they can't buy back their stock. But, I mean, you can see the stock really taking a tumble right here, 83.40 on that headline. Netflix is officially stopping their buybacks, which again is logical, but Street still doesn't like it.
For revenues. So we see shares are down nearly 4% right now. One other key headline to note here, the company, which stopped reporting quarterly subscriber numbers a year ago, reporting that it has crossed 325 million paid memberships in the fourth quarter. The last time the company reported a year ago, they had about 302 million. Back over to you.
All right, Julia, thanks. Julia Borston. Again, we're watching the stock drop here in response to earnings. Again, light on EPS here in terms of the guidance. We're seeing the stock down by 3.6%.
Yeah, obviously it's a deal stock, right? So the acquisition has been part of the distraction. I think that what investors didn't want to see is that Netflix was stretching to do the Warner Brothers Discovery deal because maybe growth was slowing a little bit. I would, though, caution that Netflix is often known for very conservative guidance, especially after the fourth quarter.
Oh, he's right about that. And I don't think anyone should be panicking on the guidance they put out. But a miss is a miss at the end of the day. And after a 2% red day on the S&P, it's tough to put out numbers saying that you're going to miss. By the way, the S&P 500 today, here's another stat, closed below the 50-day moving average for the first time since December 17th. The VIX also closed at its highest level in 2 months. So you've got the VIX at the highest level in 2 months, S&P closing below one of their lowest levels in about a month and a half. There's Netflix, 83.18. She touched 82 at one point. 82.81. That's a 5% swing to the downside. Again, the headline, they are pausing buybacks. That's not a crazy thing for a company that needs to acquire 82 billion worth of assets. But, you know, Street's reacting regardless to that. Netflix now 82.85. There she goes into the 82s, down about 4.78%. Ibkr, still don't know why this one's down. It was down 4, now it's down 2. They beat on the top and the bottom. And United, relatively decent earnings. This stock is up a lot over the past couple of years. United, year-to-date is down 4%. Over the past 5 years, it's up 157%. 2024, it did really well. 2025, it was kind of flat. but looks like most of their metrics are going in the right direction. All right, what are we thinking about Netflix? What are we thinking? Dude, how are you guys saying, please grow the beard or we're going to be doomed? For the entire month of December, everyone said, if I don't shave, we're going to be doomed. I was like, I can't win. The entire month of December, I heard, Mitch, you got to shave. You got to shave. If you don't shave, the market's going to crash. Then I shave. And I was like, you got to grow the beard back. Like, is this a game? Is my beard just like a game to you guys? Like, goodness gracious, you can't win. Can't freaking win. We're doomed either way. I mean, yeah, if we're going to threaten to acquire Greenland, we might be doomed either way. Where are the Netflix financials, dude? I want to see the actual numbers. Why are they not posting it? They're stuck in. Oh, I got it. Thank you. I got it. All right, here we go. Let's see. Okay, let's get into the Netflix numbers. Let's see what we've got. So, revenue, 12.05 billion. That's up about 18%. Operating income, 2.9. Operating margins, okay, it's up year over year by 2%, but down quarter over quarter by 2%. Then again, in Q4, that's when they spend the most on content, so that shouldn't be crazy. Net income, 2.4 billion. That's up a decent 600 million year over year. And then 56 cents versus 43 cents of EPS. Free cash flow, about 1.8 billion. That's up 500 million year over year. And they did decrease shares from 4.3 billion to 4.317, which is not too bad. Q4 revenue up 18% year over year. Operating income up 30% year over year. Operating margin expanded 2 points. We talked about that. With our strong Q4 results, we met or exceeded all of our full year 2025 financial objectives. We grew revenue to 45 billion. Again, they're guiding for about 51. A little bit lower than that, which is why I think the street's upset for 2026, which, what would that be? That would be 14% growth for 2026. Maybe they're sandbagging that, but that is a decline of 2% year over year based on the year they just had at 26%. They also increased their operating margins to about 30%. Based on their guidance, 325 million paid memberships. We're now serving an audience approaching 1 billion people globally. Then they highlight some of their series that have been the best. A lot of these I have not necessarily watched yet. Our overall engagement growth in the second half of 2025, however, was partially offset by a year-over-year decline in viewing of non-branded view hours. Non-branded view hours. This decrease primarily reflected a lower volume of licensed second-run content across most regions following an elevated period of licensing during our 2023-2024 result of the strike that they had with actors. Okay, that makes sense, but nonetheless, that had a little bit of an impact on Q4. We continued to broaden our entertainment offering. We had the 9th most watched show with 47 million views globally. As we seek to better satisfy members and increase the value of each of our engagements, we recognize that not all viewing is created equal. Some titles spark a level of passion and fandom that has outside impact. What about advertising? We also made great progress growing advertising revenue in 2025, which was only our 3rd year selling ads. Ad revenue grew by more than 250% versus 2024. It's over 1.5 billion. Can't be upset about that. We continue to harness AI to enhance the experience for our members, and we're expanding these capabilities to support our creative teams and advertisers. We began testing new AI tools to help advertisers create custom ads. And that's all that they had to say about advertisers. Where's the stock? All right. So, I mean, those are the numbers. The numbers not necessarily compelling. Operating margins are up about 2%, up about 3% year over year. But the growth is slowing down if you believe this guidance from 16 to 14%. I mean, I guess that's to be expected, but still, Netflix right there, 83.20 getting a little bit of a bounce. Let's get a little bit more coverage on this one. And then we'll keep going from there.
More Netflix. Julia.
Melissa, Netflix announcing that it will be pausing its share buybacks to accumulate cash to help fund the pending acquisition of Warner Brothers, saying we remain committed to maintaining a solid investment grade rating. In the letter to shareholders, the company also explaining its philosophy behind the acquisition of Warner Brothers, saying they believe the purchase will allow us to accelerate our business strategy to Together, we see two main areas of opportunity. First, Warner Brothers library development and IP will allow us to provide an even broader and higher quality selection of content for members. And second, the addition of HBO Max will allow us to offer more personalized and flexible subscription options, better meeting the diverse preferences of our global audience. They go on to talk about how Netflix and Warner Brothers are complementary. As to the question of engagement, they note that the engagement remains healthy, and they say in the second half of 2025, view hours increased 2% year over year, driven by a 9% rise in viewing of branded originals. They also note that they see sustained overall growth with 2026 revenue representing a range of 12 to 14% growth year over year, with ad revenue, which of course is a new category, expected to roughly double. Back over to you.
All right, Julia, thank you. Julia Boorstin, Netflix stock, close to after our session lows at this point. Coming up on Overtime, much more.
Okay, that's what we got for Netflix. That is what we got. Jason will be here in about 5 minutes, and then we will get started with Technical Tuesday. For those that care about technicals following the, I guess, mini pullback we've had, we're going to be talking about that for the next few hours. But Netflix right there, 83.70. I guess as an earnings play, this one didn't work out today. If you did buy at least 100 shares, then you can probably sell a call on it tomorrow, or wait for it to rebound and try to generate a little bit of money in between. I wonder, the problem is there a glaring, or like put in the chat, is there a glaring red flag on this earnings? Because yeah, they're not doing the buybacks. Who cares? They're going to be buying Harry Potter. Revenue growth slowing down a little bit. Okay, but they're becoming a bigger company. Advertising's up 250%. That's bullish. United, by the way, that's up 3% right now. Operating margins did expand, which is good. I mean, if they're sugarcoating the guidance, then the guidance probably should be closer to 17, 18% growth. Like, there's not like a major red flag. It's just, I think, an overhang of this Warner Brothers deal that is not coming into fruition yet. Netflix now down 4%. Yes, the Stranger Things ending was terrible. I haven't watched it, but I believe all of you guys that have said it's terrible. Maybe that is the reason. Bean, thanks for the super chat. Honestly, Netflix sucks. There are hundreds of free streaming apps that work better than Netflix at $0. Anyone with a smart TV still paying a subscription fee is throwing money in the trash. Look, I felt that way a couple years ago, which is why I didn't buy Netflix at the lows of 2022. I was wrong about that. There is obviously a lot of audience for premium content, and people do enjoy what's on Netflix. My bear thesis has always been, I think it's a media company, not really a tech company, and they have to license to pay and buy so much content, but they are able to continue growing. Even if they're growing 15, 17%, that's still growth from a pretty high base. Question is, are you willing to pay 37 times earnings for 14% growth with operating margins at 29%? Because there's plenty of other tech companies like a Meta, like a Google, which I know, comparing them to big tech might not be the fairest, but I mean, Meta is trading at very depressed multiples with way better margins and way better growth. They're growing Meta's growing 26%. Netflix just got it for 14%. So, and Meta has a lot more tailwinds behind it than Netflix, which has to keep finding the next piece of content that ends up playing out. So that's always been my bear thesis on Netflix. But regardless, I don't know if that means that Netflix necessarily needs to get thrown in the gutter down to $70. Yes, and their ad revenue is in infancy. That is also correct. We got the Ibkr founder. Let's pull him up right here before we get Jason on. This guy is worth $80 billion, by the way, Thomas Petterfy. Let's get his take on Ibkr's.
Individual customers beat the S&P by 1.3% after all expenses, which is very significant. And the same metric for registered investment advisors on the Ibkr platform was up 2.67% after all expenses. And finally, the more than 2,000 hedge funds on our platform that had more than $1 million at the beginning of the year beat the index by 11.01%. So they had a total return of 28.91%. That's, I think, is extremely significant, and we are very proud of that, because this outcome clearly demonstrates the overwhelming advantage that our customers enjoy on our platform, and the reason why the best informed investor chooses Interactive Brokers, as we say that all the time.
Well, certainly, obviously, it's a bull market, and I mean, there's some leverage, right? Obviously, there's on a net basis, there's borrowing. But what do you attribute that to otherwise, aside from just, okay, having lower transaction costs? I mean, you know, who are they winning against?
Well, they are winning against all the other customers, right? Are the customers of other brokers. That is the amazing thing, right? And other hedge funds, right? So few hedge funds had a 28.91% return, and our hedge funds did. So
you should start an ETF, Mr. Petterfy, to track your traders there on your platform.
Right,
I wanted to ask you
right.
about the prediction markets, because that is an area that every other trading platform is eager to get into. You do have Forecast Trader, which allows customers to predict things like climate, economic events, but not sports. How are you looking at this? You're very bullish on this area of the market. You have said in the past that you think that this area could be more popular than stock trading. So how are you going to expand this?
I'm extremely bullish on this thing, because basically the prediction contracts taken all together, they describe the consensus opinion about our lives in the future. And as the markets develop, the picture will be ever sharper and more detailed and more precise. And they'll be used by people to plan their lives. I think it's a very, very important thing. And it is going to be a huge success. And by the way, sports, we just had bad news today, because I think it was
wow, margin loans up 40% on Ibkr. That's pretty incredible. 90 billion worth of margin loans. Obviously, that's increasing across all the brokerages, which means risk on appetite is increasing as well.
Lives. I think it's a very, very important thing, and it is going to be a huge success. And by the way, sports, we just had bad news today, because I think it was Massachusetts, where the judge came out against sports.
Yes, a judge gave the state of Massachusetts the right to prevent folks from betting on Kalshi on sports.
Thomas Petterfy came out a couple weeks ago and said that prediction markets would be bigger than the equity markets. I don't know if that's going to happen. But it's not just Vlad and the young guys that are bullish on prediction markets. You do have someone like Thomas Petterfy, who's been around the markets for the past 50 years, who sees this as an emerging new asset class. Meta right there, gapping up a little bit after hours. That's up 0.54%. Again, their margin loans up to 90 billion means that risk on appetite is very high. We are now having the most amount of FINRA-based margin in history. I believe we are at 1.4 trillion. This surpasses 2021. People are obviously borrowing money to go risk on. Ibkr erased a lot of the losses they had after hours. And, you know, that's part of the risk on sentiment that exists in the market. United, that's up 4.3%. And then one more look at Netflix. That stock is still down 5%, 82.98 after hours. All right, folks, let's get into technicals. Thank you, everybody, for being here. If you don't care about technical analysis, then that's fine. But for those that do care or that are interested in learning a bit more about technicals, we are going to have someone who I think is probably one of the best people to analyze technicals come on the show. We'll be on for the next couple hours. We'll try to get through all the big names, NVIDIA, Hood, Tesla, Palantir, and then we'll take audience requests. Also, remember, we had a big fundamental thing happen over the weekend with these Trump, Denmark, Greenland tariffs, which means the charts have reacted to them. But obviously, that tweet is kind of what set things in motion, and we're going to have to see now if the charts give us any insight on where these markets go. All right. Having said that, it is time to roll the intro. What's up, man?
What's up, buddy?
Do you know how many people in the market open said, "Is Jason on today? Is Jason on today?" Are we having technical?
I missed my so the market was closed on Monday, and we don't usually do a stream when the market's closed for the weekly trade plan. So they might have been.
I'm just letting you know, you have leverage now with me. Like
Leverage.
I should be paying you. At this point, I can't lose you, dude. Everyone
It's only because you found a new trick this year, which I'm sure that you're actually very happy with. But
today it was a good day to have those covered calls.
Yeah.
All right, dude. Let's not waste any time. Let's get into it. People are curious. Let's pull up the S&P chart.
The S&P. Did you see my video? I was like, I don't know if I should post this or not, but I went ahead and did it.
All right.
Can you share that? I
do
just posted on my timeline on Twitter.
Okay.
It's like 30 seconds. I cannot be the only one to see this, right? Like, there's no way. But I was just looking through some charts just the other day, and I'm like, well, what did the last little drawdown look like? And I mean, pretty clean channel, up, finally breaks, and we get this little pullback. And I'm like, well, I mean, what did it look like? Look like this, a little blip with a little press higher. I don't know. I mean, do we have the same thing? And I'm like, well, do we? Same channel. It's not going to look good, my dude. Like this. No. No. Like, once you see this, you can't really unsee it, right?
Okay, so fair warning to everybody. Jason might be a little bearish today.
No, it was a joke, jokingly, right? But it does rhyme. But that's my warning, right? Like, I think the question is, well, you help me, Amit, or the chat. Where is everyone right now? So, like, you don't want to know if I was positioned for this. You guys don't care about that. If we're making money on the downside, what are we concerned with today, right? Like, that's what I kind of need a little help with. Do we want to know? Do we buy?
I think people. So the past is the past. I think people want to know. I think the two questions people are concerned about are: for every stock, do the technicals signify that there's more pain ahead? Obviously, we don't fully know, so it's our best guess. And then two, is this a dip to buy? Is this an entry on a technical perspective, even though it was caused by some fundamental narrative with the tariffs that is attractive? Because
fundamentals would be involved here. I think you have to pay a lot of attention to that. I mean, some people that are like purists in the technical world, like the pure technicians or pure chartists, will be like, oh, it doesn't matter about the news, right? And I think in theory, that sounds really cool on paper. Like, you don't really need to pay attention to it. Everything's built into the chart. That's what they say. I'm not that guy. I do believe that you have to pay attention, but I will say there's definitely something to be said that when there's a fundamental event and it does line up with technicals, what you thought might be support is probably not going to hold. It's probably going to go beyond what you thought a good spot would be. Is it a dip buy? That very much depends on your time horizon, right? Is this the low? I don't think so. Did I buy anything today? Other than my Freeport and some like it's the K-shaped economy, right? So my question is, well, did we just put the highs in for the year? And like it's for right now, what we know to be true is that we're not going higher.
I don't think we did, but to your point, it would be very reminiscent of 2022 if we did.
Yeah, and so like you think back, what happened back then? We went into a rate hike cycle, right?
Right.
After cutting. And so that right now is war, whatever, etc. Those are very temporary things. Most of the time, very viable, probably not on the first pullback, but absolutely viable. Then again, I would preface that with what you thought might have been support in the past is probably going to go beyond that. So you might want to go a couple levels lower. But when you think about what's going on, we have super hot GDP. Inflation's still there. But at the same time, we have a lot of rate cuts that people are thinking are going to come. It's still about the rate thing. So like if for whatever reason GDP runs ultra hot and the economy is like, blazing fire, we're we're probably not going to get any cuts. And quite frankly, we might have something called a hike. And if that's like the black swan kind of scenario. That's what would throw everybody's thesis out the water. And it would probably get priced in for 2027, that maybe we see something, which means that dip for the midterm election is not until the eating season of 2027. So I'll preface with that, like where we might bottom out. If it's all, mirror exactly the same, this is not going to flush down tomorrow. No, it's probably going to bounce for sure. And it'll probably bounce to somewhere around today's or Friday's close. And if we can't get over that, that's probably a good spot to, we lock in this trend structure. And I'll go ahead and start the clock here. But we're always counting the trend, right? And so this is, you guys can see my watermark. Everything's clear-ish.
Yep, you're good.
Ish. So we have, a very clean and clear uptrend for sure from Liberation Day lows. And what I'll preface that with is it's extremely steep. Today, for sure, what we did do is we absolutely broke that. Here, there's room to the downside. If I just connect a couple of these from the lows, there's actually more room. But the very steepest part of this curve, or this trend channel, if you will, it broke today. So where I think we go, again, because I do mix these fundamentals and technicals a little bit, and I'll just zoom in just slightly, just so you guys know, we always talk about NFP days and non-farm payroll days. And throughout the last technical Tuesday, what I was saying is look, what we need to see is a full day open and close above this 695 high. And we didn't get it. What we did do is we tested it once, but that's a test. It's not like you're actually breaking down. Today we have a gap down below, and in this situation, in this system, if you will, when you lose one level, I might be able to make this a little bit bigger. When you lose one level, you go to the next level. That's kind of like how this works. Let's see, huge is probably too big. All right, but you can definitely see the levels now. But when you lose one level, then you go to the next one. And actually, that's exactly where we opened at today. If we go down another one, the next two are around the 675 level. So quite frankly, I think at most that's where we could see this week. But at the same time, it's we just moved an average week's range, what we typically move in a week, within less than a single day. So to expect it to just continue to flush also, probably not so much. Do I think that we can bounce off this 670, between 670, 675, just under 675 type support? This is near-term support. I think we can. But again, trader hat on, investor hat off. If that goes up and then we have something like this that gets rejected, that's about what we're talking about. So structure has been broken near term. And at worst, you got to let it play out and wait.
Now, if Trump tacos tomorrow, that structure could be back intact.
Exactly my point, right? So right now, you got to pay a lot of attention to what's going on in the headlines. Can this get worse before it gets better? Yeah, I don't think it can get a lot worse this week. No. And for me, it's just think we're coming off the highs. Some people are probably scared. People act completely irrationally, and they might be in the sell the pop kind of mode instead of buy the dip mode. I mean, if you bought the dip out of the gate this morning, you were probably feeling good for about 45 minutes, maybe something like that. And then quickly what do I do? And so you have to think about that though throughout this entire situation, because it's not just investors that we're dealing with, it's traders throughout January and February as a whole. And I'll close off here with this, is that we do see a lot of, I almost call it random selling. Sometimes, we have the tax loss harvesting coming into the end of the year. But also some of those losses that weren't harvested get pushed off to January and February. So that piece is not really over. So that said, I would look for this right around 670s area to hold as this week's support. And then I would actually look for a pretty big bounce, but I would caution that with don't be fooled with the bounce, because unless that bounce is holding well over 690, it's very likely an area that will act as resistance. And I'll just put one more level over here, and that is this prior all-time high. So right now, what we have from a structural standpoint is something called a look above and fail. It's just what we call it, where price has looked above, right up here, and then we just failed. This is SPY. I'll call it there. And so that means that we should probably go into the bottom of this consolidation range, which is about low 670s, and then retrace. Is that a bounce to sell? That's your call. For now, I might defer to yes, but you don't have to sell it. It's more of like, what area are you in? I'm just going to do Qs really quick because we did it last week also, and this was that consolidation here. And we said, look, up here, usually I'm not inclined to take the first like break of any of these trend lines. I'm not a big trend line guy. I think they're important, but I'm a structure guy, I'm what we call a price action guy. And that said, price action, same thing. We have this, unlike SPY, never actually became a bullish chart. It was just telling me, hey, look, consolidation. Our high was locked in over here. Then we had a lower high, but we did have higher lows, which gave us this kind of consolidation. Today is a clean break below. It's not too dissimilar. It's like, if I wasn't short already, do I continue to press this short? Well,
that's another question. I think a lot of people should they pay the elevated premiums on the puts today?
Not today. I think that today it was very knee jerky, and they're going to be elevated. But I think that what you can do is like we did on SPY, or not SPY, on Hood, and I did on Tesla, is sell some protective calls. So I would look at doing something like that, probably at this point out to July, and if not further. But just take that with a grain of salt. We're not super bullish at the moment, but at the same time, if you were going to be a bear coming into today, the issue with where we are is that this is all of your downside targets, if you will. So the bears should be taking profit at the very close of today, if not early tomorrow morning, or maybe even the overnight session. And so I would expect actually a bit of a bounce between now and Friday. But come Friday, I would say buyer beware, because they're not going to forget about where we are come Friday. And so if we do have a bounce midweek, I would just be a little bit cautious. I wouldn't roll with that unless you're in something that is bucking this trend in its entirety, like my Freeport, like even some of the semis, SMH, which I can look at right now. Oddly enough, still holding structure. So this is that level here, prior breakout. We're still there. Are we at risk? Yes, but you look at some of these things that was like and I'm not doing the charts, but I'm just saying a Micron, it was a good day today. It got down.
This stock is
right.
I don't even know what to say.
Yeah, I'm not gonna lie. I did nibble on some Western Digital the other day. Similar kind of thing. I don't need these NFP levels on equities. But what my point is that not everything is really bad, but the legacy stocks that you're used to being in, Microsoft, Amazon,
they're all dead.
Google,
for now.
Apple down how many percent today? I was
4%.
short Apple.
Why the hell is Apple down 4%?
Because earnings are coming and everything's run really strong into this next earnings report. And it's like, what do I have to look forward to next? We're at the highs. This could be a mix between fundamental news and little pre-earnings jitters, where a lot of us are probably used to seeing this pre-earnings run up, but that's when the setup's good. The setup is not good for that right now. The setup is like the opposite, where it's like we're coming in hot, so cooling off is actually going to set us up better for earnings season anyways. But even still, something like a Netflix, which I know you're talking about, I mentioned the Netflix chart a long time ago. It's not done to me. I mean, is it a buy? Like, is it a screaming buy? I don't understand some of that, but you know, Netflix is going into an investment phase. And I think people have to understand that. So the question is, if my time horizon is good enough, will I start buying? Like, as in, you're not going to pick the bottom, right? Nobody's going to snipe the lows or snipe the highs per se. Like, even me, I'm not trying to snipe this 133 and short it to the, no, that's not how I roll, right? Like, and that's not my job as a trader either. It's just to find the prevailing trend. And I mean, right now, you're losing the support. We know that Netflix is in an investment phase of their journey. It's a heavy mid cap, so it was like large cap, but 500 something billion. Oh, I'm sorry, 400 billion now. But that's still a lot. And the question for Netflix is, how do they get to be $1,000 stock? That question is still out in the air. Is it through Harry Potter? I mean, I love my sci-fi, I love Marvel, but even that is going to be a long journey. And so over there, yeah, call me 75, call me at 60, and I'll take a look.
All right. So so the trend on SPY and Qs are broken as per the Trump tariff stuff.
I wouldn't say broken. They're at risk is what I would say. So then very near term broke, but like I said, especially this kind of situation, you can get one little blip like this and be right back there.
Right.
Like super easy. So it's not like that. It's not like they're totally broken, but they are all at risk, just like my hoodie, just like our Tesla, whatever. And you should be cautious, not as optimistic as before.
Okay, before we do NVIDIA, can we do a quick 1 minute on Netflix? I mean, you already touched on it, but yeah, just a quick short term. What do you think happens to this one?
So I mean, I don't know if Netflix, I'm going to take off all my drawings. I'm going to do a 1 day chart. And so we talk about this stuff all the time in terms of simple moving averages, everything that we've taught over the years. I feel like it's been more than a year and a half. I feel like it's been closer to 2 years. Everything that we've been teaching over the last year or so has been about, you know, from a broader perspective, transitioning from investing to trading and looking at things like these simple moving averages. And, you know, we say, hey, look, when these SMAs here start to get wide, I mean, that's usually like, careful, look out below. Right now, you're below all significant SMAs. But a break like this, and what I'm going to try to do is say something like that. I'm using the wrong tools, so apologies. A break like this, and I see something like that with a breakdown. First of all, this is pretty wide, this distance between these SMAs. Can it bounce? I actually think it can. This could bounce, but up to where? So you're going to go maybe in here. I don't think, so that's maybe 100. It's still in a downtrend. So it's got a lot of room to make up. It's got a lot of work to do. Was it a sell if you own it? I mean, this is like asking if I'm going to sell my Bitcoin. Like, do I really care if it comes down 50%? Like, I probably don't. So again, in trading versus investing, I think this pulls back a very basic long-term from this swing low, which is 22, to that swing high at 133. 50% retracement lands you, I mean, exactly at $75, which when something loses 120s, you know, we make the trajectory, right? We always do this. You know, something goes over 75, you're going to 120, but the inverse is true. You lose that 120, yeah, a lot of times you make the full trek back. And so in that instance, that is where not just me, but probably a lot of other people will look for. And I'm going to look for probably some kind of consolidation that can have a short-term breach all the way down to 60s and it still be viable. And when I look at a trend like this, you're like, okay, but pull it back for just a second. And you're looking at something like this. I'm like, if I had this pullback and do something like this, again, this is all perspective. What is your time horizon on something like this? If you're buying Netflix for the next 3 to 5 years, which is the minimum viable to be classified as an
But I'll tell
investment.
you right now, no one was buying Netflix for 3 to 5. Everyone was buying it for a move back to 100. At least like someone tell me I'm wrong.
That's so dumb, right? Like
But
what?
like,
I
no
mean,
one was buying Netflix at $88 for the next 4 years. Everyone expected a real big move. And I'm not seeing that.
yeah. So then it's not. So in your opinion, then it was an investment quality, right? Because if it's going to be investment, it has to be like that. Because if it's not like that, it's not an investment and it's a trade, and you need to define it like that. But a pullback right in this area, honestly, I would love that. I draw this straight across. I'm going to retest that prior high and this whole general area. This is perfect, right? This is below 75. It goes all the way down to 55. But if that's the case, and again, if your time horizon is long enough, if I were to extend this and say Netflix does really good, there's a $200 stock, right? In 2028.
Which would be basically an $850 billion company.
Yeah. And is something like this possible? Oh yeah. But your time horizon has to be right.
Agreed. 100% agreed. Okay, NVIDIA, what is going on with this bad boy? AMD goes up, NVIDIA goes down. What do you think's happening?
I think it's the demise of the Mag 7, which we talked about last week. I think that's very real. NVIDIA, by the way, hasn't gotten to a spot where I'm like really interested in buying. This is our chart from just last week. Where we are is like, if this goes any lower, I don't know that this is going to hold either, because it's been knocked on so many times, and the velocity at which we're coming in at. Again, it's what I did mention last time was that NVIDIA is normally a screaming buy ahead of the Mag 7 earnings, right? Like for the last, I don't know how many years, guys. I mean,
basically 3 years, because all the Mag 7 have amazing capex, and that pumps.
Yeah. But this year, that might not be the story, because the more the concern this year is like custom silicon. People are like, well, how am I going to drive efficiency? And does that really just mean buying more NVIDIA? Which is why we're seeing AMD, why we're seeing a lot of these other things happen. Even my Astera Labs is up. But like, if it's going to be custom silicon, that means it's not necessarily NVIDIA. And look back to some of the other, you don't have to pick the winning chip. There are companies that will win across the board, like your Amkor, probably decent, right? If they have deals with everybody, or a lot of the tooling companies, ASML, LRCX, right? KLA, right? Those are if you're going to be building fabs in general, which we believe that Trump is probably going to want to build fabs somewhere. You don't have to pick NVIDIA. You don't even have to pick AMD. But if you pick the companies that they build the fab, like the companies that their products go into building whatever fab it is, that's your Lam Research, that's your KLA, that's your ASML. And so that's why those are still going to be doing perfectly fine right now. And that, to me, that's my opinion. I don't know that for a fact, but it's my guess. From a fundamental perspective, it's easier to pick the picks and shovels there first before I have to go out on a limb and put more net new cash into an NVIDIA. So while NVIDIA looks heavy, I think it can see the 160s again. It doesn't have, like this one. I'll just get back in my lane for just a second. This 150 here is like, if that's the local top, basically we're looking for this green box right in here to get retested. So that's somewhere between, quite frankly, it's like 150 is nice, but I would probably be a buyer at 135. If I saw full blown breakdown, I think that's a solid discount. But between now and then, it's just a no touch. Like, I would be more inclined to sell short-term calls. I think during the Mag 7 earnings report, it'll probably get a little heavier as we come into that because of some maybe irrational fears. And then right before NVIDIA reports, they're going to be like, oh, no. Like, I actually still want this. So that sets up something like this to me. But that is like right back to where we came from. And it's not really, that's a trade. That's not necessarily an investment.
What about in the money covered calls like you did on Hood and Tesla? Would you do that on NVIDIA or
145?
145. Okay.
Yeah, 145. And I'd slap it right in here, right? So see this green box? This is 145 down to 135. And that's exactly what I'd be looking for. And how much do you get actually? So what did I say? I said at least July,
you have
just
50,
a little bit ago.
Oh, you're doing July? Okay.
Well, right now, but look at that. So, okay, 145 July calls. If I sold those against 100 shares, I'm going to pick up $45.
Yeah. Yeah.
The stock is currently 178. That gives me protection down to 135.
Yeah.
And if I do get called away, that's giving me an exit at basically $190, which is higher than where it is today. So if you think about things like that, that's how I would structure it right now. And if it does go up, cool. I will roll up and out, whatever.
But 135 outside of the chart,
45.
Yeah. As a level, that would have to be a fundamental breakdown of the market, right? Like that would have to be DeepSeek 2.0. That would have to be something aggressive.
No, I don't think so. It's just like that is. It's not even half a trillion, dude. Is it? I mean, not. It's not really. We're like $1 trillion.
178 minus
122 is 3 trillion. I have this on my chart from way back when.
It's 1.03 trillion. It would lose it.
Yeah. So 3 trillion is $123, which yeah. But we're not.
I just don't know if it gets there from the chart. Like I feel like the S&P is down like 20% if that happens, right? Or at least.
Yeah. So like I was saying, NVIDIA right here, right now is just, it's in a trading range still. And so this range takes you to the downside of the 160s. Yeah. Which like I just wrote this on the chart. Like I think you could breach it. And then probably about when it's about 160, 165, earnings will be right around the corner. All the Mag 7s will probably have reported. And then they'll be like, oh, no, I can't live without this in my portfolio. And then it'll bounce right back to where it is probably right now. But the question is still, does that mean it's going to actually recover? And I think I personally just need a little bit more fundamental information on what that would look like. Does NVIDIA get into, I mean, it's the what's the next thing that's going to push this higher question, and what the market's always asking. It's probably going to be something like memory chips or something ridiculous like that. More transceivers, something maybe with the Mellanox acquisition, but some new product or subset of workflows, whatever, that is not robotics. Because I mean, that's not enough right now. Yeah.
Tesla, what do you think of here?
I think 415 is in play. Yeah. So this red line is 415 right here. I'm pretty positive it's going to see that. Again, the question to me is like, well, oh my God.
Didn't you, day, dude? Had an ugly day.
Didn't you call this like to the penny?
Did I?
You said, was it you?
I'm going to assume it was me because I called it to the penny. So
you top ticked this? No, I think somebody was like December 18th, 2024 was the high, and the breakdown, December 26th, 2024, breakdown Tesla. Do we have a repeat?
It was the day after. So, I mean, technically, yeah.
Oh, it was you though.
Well, I brought up the stat. I wouldn't say I personally top ticked it, but yeah, it was a day after the top of last time.
Uh-huh.
But then it fell to 210. So like, are we going back to that? Or
so I think, well, so quickly, if 415, so first of all, these are going to be choppy. Stocks do not move in a straight line. It's just not how they work. We lose 415. It's going to get ugly real fast. We're probably going to see 380s. I'm not going to be a buyer there. You probably breach your double bottom. And if it's something like this, right? That's more along the lines of what I would think of a breakdown. I sold $400 calls. I manufactured myself a 560 something share price exit. I already have protection here. Not that you guys care about that, but if this looks like this, I think you can breach, and then you're going to get a bounce right off probably the 200 days. But this is not in play yet until I have a breakdown below 415. So again, like a lot of charts right now, these shorting this here now, it's like your initial downside targets have been acquired. This does not have to happen. it just doesn't have to happen. If this doesn't break down, like we're still very much in this consolidation, and that can happen, but that's more like hopium right now. And I'm not really packing the hopium pipe today. So I think tomorrow is going to be an interesting day. I think that we absolutely get bounces from here midweek. The question is whether or not those bounces can take us above Friday's level. Because if they can't, last Friday, by last week's close, if the bounces cannot take us back above or green for the week, I think that more selling is in the cards on Friday.
Yeah, I mean, and I think that you could say that for a lot of these growth stocks, right? Like if they just don't.
Yeah. So I'll just take a flyer here. Microsoft's one of the worst looking ones. And I think I did mention this last week, last Tuesday. So here at 450, we're actually, again, from this high to this low, we're already at what we would call like a bullish retracement, 450 retracement. But up here, like this breakdown, 505 or whatever, that's a Netflix-esque breach. And down here, 2024 all-time highs. We talked about this. I'm like, I did not like the look of Microsoft. So if 450 is lost on Microsoft, we have, from a statistical perspective, just stats on trading. If you lose what we call the 50% retracement, which is right here, if you lose that, you have a near 70% probability, and these are stats that I can lean on, of seeing that 420. So do I press this bet here now? No, right? But if I bounce and I see something like this that comes back up to 470, that prior all-time high, and then starts to fail, and then I have like this, I think that's very realistic ahead of into earnings. So I would say Microsoft is very much at risk, but it's not like, it's more of a, I can do some near-term protection, but at this point, I would rather wait to see this area get retested. And again, this is that downtrend that was broken. Honestly, this is pretty clean. If we get that, and then we get this, I mean, then we're back in the green. But this timeline could be a lot longer. I just don't want to get stuck sideways for too long. But Microsoft is very much at risk. It's at the lows, but it's not a great looking chart right now.
AMD
does look, so much better, right? Dude, our charts are getting, no go on AMD. So I got into my, this is consolidation is what AMD is. So that's the bull zone right in here, that green box. And then there's a retracement right here. This is resistance. So, I mean, if you're going to be into trading, I've said this a handful of times, it's like, it's better not to buy calls at resistance. You usually want to buy them at support or go long. You want to go long closer to support, but you don't want to go long into resistance, and definitely into this kind of resistance. This is not good. This looks like we're going to backtest that 210s. Over here, if you're going to go long, you need to see it actually get way over that 240 level. For now, 227, which is the prior all-time high, still that price of interest, still a pretty key pivot. But if I zoom in to a 15, I mean, we barely held it. So I would say 241, 242 is going to be your overhead resistance. That's where the bears are really sleeping, right over here on AMD. What this is, by the way, this is a measurement from this high to the local or near-term support lows. So if something happens from a political or a tweet perspective, when I said don't expect that near-term type support to hold, this is the kind of stuff that I'm talking about. Like right here, You might think in a normal market that that's good support. In a headline driven market, that's not holding. So yeah, this has to hold. I would you don't have to do anything, but I would like to see this hold that 227 prior all-time high and that earnings peak right there to be bullish, more bullish. But the chart is more constructive for sure than NVIDIA. And just to cap this off, I'd still have 300 upside targets if this actually does go. So assuming that can continue on, I think we said this before, you're still a $300 stock here, but there's your consolidation that's forming. So I just connected that high and that daily high, and you're starting to get this to me, it reads as consolidation, not a breakout. So to me, this reads more like this. And so until we get either a breakdown or a breakout over this.
It is going the opposite of NVIDIA though, which is maybe a market cap thing, right? Like it's not.
Is it a market cap thing? I think it's more of like is it market cap or?
I mean, they got a couple upgrades this week, but NVIDIA's got a couple of upgrades as well. I mean,
yeah,
it's confusing why. I feel like more maybe there's just rotation into AMD over NVIDIA right here.
Yeah, just fears that NVIDIA's ultra saturated. I don't know. I mean, NVIDIA's going to be perfectly fine. Even if it does pull back, it's still going to be perfectly fine. But that's your resistance. This is your consolidation here on AMD. It's constructive, but this is a probably iron condor type ticker at the moment, in my opinion. Meaning like neutral. No trade, but neutral. Hold if you're bullish. You don't want to see it lose like if it even gets close to testing this, like I want to see it hold 227 because otherwise you're back to the lows and I'm not sure they're going to hold.
Meta.
Last week I said I'm pretty positive we were going to see 600 again. We saw it this morning. I did not buy it this morning. So we got to 599. This is what I'm saying. Like
we touched 599 today?
Yeah.
Did we?
Yeah.
Wow.
So this is that kind of probability thing, right? Like you lose that 50% retracement, you have a near 70% probability of going back to this. Same thing to the upside, right? Just a tradable range, super clean. We have earnings coming on NVIDIA or on Meta end of the month. So I think this is another example of like the chart's not cool right now. We got our death cross. It bounced, didn't really pull back, but I still want to see what happens here. So earnings is going to change the story. Earnings is going to make or break the trend. If this breaks down, I'll get because of earnings. What I'll do, dude, if you're okay with that, is just I'd rather give you a range on Meta. So assuming that this doesn't hold, this whole thing is that broadening formation. There's you're very likely going to retest this next level down here. So if you're thinking that 500 is support, like no, like that's near term support. It's not big support. And what I'll do really quick is just like everything else. I'm going to take actually from the absolute lows up to here, and I'm just going to say, hey, look, the bottom of this consolidation area, that's 440, dude.
Dude, we were playing with those numbers last week. I don't think we get there, but
you were?
Yeah, we were talking about that. I mean, look, if the S&P falls 10%, I think all bets are off the table because margin is up the ass right now. You got everyone bulled up in the AA sentiment surveys. I mean, like, I think there would be a lot of forced liquidations quickly. I think the rebound would be pretty quick as well. But
yeah, I don't actually think that Meta does this move right away. My gut tells me that Meta is actually pretty flat on earnings even though it looks really bad, I think it's pretty flat because the first reaction is going to be like, well, we didn't think it was going to be that great. And if there's any kind of like decent news moving forward, Meta Cloud is not in here. I think Meta Cloud can be a massive turnaround story for this company, but how do they get there? What do they have to spend? We talked about this last week. In the near term, does that mean that I can see this 500 kind of retest? It actually does. And it'll still be that whole fundamental logic will still be there, which is the craziest part. Other than that, it's the same trajectory. If we're back over 635s, I mean, we're back on the grind, and we're into the 700s one more time. But this box right here, I think this is probably your localized lows between now and next week, and the upside is going to be 634. I don't think this gets out of this box, quite frankly. I think this actually stays in this box. But the downside here is going to be like a 500s on a knee-jerk downside that probably ends up getting bought up, and then like this, like that. If it's really bad report, I think you have a pull down that gets bought up. But if it's not able to get over this 580, that's going to be a short spot, because anybody that bought here is going to be probably a seller into this scenario if we do break down. But a breakdown on that, I feel like, would be short-lived.
Hoodie.
Hopefully I don't need my words. Hoodie, man. I mean, Hoodie's been at risk for a minute. Yeah, this is our consolidation. She's not going to hold this. You asked me today. Were you asking me if I bought Hood today?
I'll ask you now. Did you buy Hood today?
I did not. I did not.
Yeah,
Nor have I covered.
This chart does not look like a dip buy here. But then again, it's similar to a lot of charts. Now, the fact that here's the other reason I think the dip buy is tough on Hood right now. High beta has been on a massive run, and the most high beta of high beta, the marketplace for high beta is down 20%.
Yeah.
I think
so
that's the tough part right now.
I think we see 90, 91s. I'm probably still not going to buy it. If I saw something with a 7 handle on it, I might go take a loan. I might pull out a loan. But no, in reality, though, like I have some cash sitting on the sidelines, specially reserved for my hoodie. But it's got to be a big discount, and I think we can get it. In the meantime, I don't think this breaks down this week either. But we have earnings coming February. What I will say is the one thing that's really bothering me is what we saw in crypto over the weekend. I really do not like what I saw in crypto. What I saw in crypto this weekend, and I didn't see anybody talk about it, was I'm looking at a liquidation event that started to get worse. So I'm looking at another rug pull. So I don't know.
We'll talk about Bitcoin, but okay. So your Hood bear thesis for now is crypto. That's the issue.
It's crypto, and I think that I firmly believe that that the event contracts are gonna blow everyone's mind with what they do. My one major concern right now is that they're gonna blow everyone's mind away, but then everybody's going to come out of the woodworks of that's a seasonal business, right? Like event contracts because in reality, it kind of is. What can they forecast moving forward, right?
Yeah, no, it is. Okay, so you think 90 is possible on this one?
Oh yeah, 90 is definitely possible. 75s is possible.
Okay, Palantir.
But I'm not selling any. I'm gonna buy it.
Someone said Jason missed the bull run. Jason's been in Hood since $8. So
I missed the bull run.
You've been part of the bull run on Hoodie.
Damn.
They don't know, bro.
They don't know.
They don't know. It's because you don't get invited to these events, bro. You're not a.
I don't know what's up with that, dude. It's because I'm a trader. Like they don't like traders. Like, dude, what the hell? Okay, I got to preface today with like first of all, it's a really red day. Like all these charts are going to look kind of gross. Like they're all going to look kind of gross. But I started the show with like, I think we're going to bounce midweek. The question is, does that bounce really hold? I think that's the idea. So 163s, it's possible we see as deep as 158s. That's what I have here. But on Palantir, dude,
she's been actually holding up.
I was just gonna, so this could be it on Palantir. So for now, I think it really could be it. So we had a little inefficiency in the market coming into this from right over here. This guy. So 173s. I like this level, but at a minimum, what I absolutely have to see on Palantir is I have to see this start to close over 170. Without a close over 170, and that's going to be my minimum requirement. So maybe something like Palantir tomorrow. Again, it's tradable range. If we have something like this tomorrow that gets bought up, I think you could see the 50 again at 177 for the week. But this is what I'm saying. Like at that point, what happens? Do you roll over again? So Palantir here now, I mean, it's probably going to bounce. That looks like that really looks like it's going to bounce. But back to resistance in the low 180s. And what happens at resistance is going to be more important than this bounce right now. But it's holding, it's pretty tight. Below 155, if that's happening, then yeah, it's not going to be fun. But we're so far away from that at this moment that I can't call something like that. Like that's just it's not in the cards. But this looks like tomorrow we're going to get a bounce, I think. Don't hold me to it. But I feel like tomorrow might be one of those. Here's what I would say across the board. Across the board, if we open red tomorrow, I honestly think that a red bloody open is the best case scenario for the market.
I agree.
If we have a bloody red open tomorrow morning, I think from a trading perspective, I close all my shorts and I probably flip long into Friday, but Friday I got to cut that, right?
A bloody red would be another 1% on the S&P or what?
Yeah.
So not 2%, not 3%?
On solo, I'm not guaranteeing nothing.
Like I agree, a 2% down day is pretty intense. Another 1% would make it 3%. That's getting close.
Can I show you something that's like not what we normally do? Is that okay?
Yeah, go ahead.
Where did this go?
And
Okay.
I do agree. Sometimes you got to rip off the Band-Aid, right?
Yeah. So these are called market internals. And there's lots of them, but I'm just going to do one right now. And this is something called ADD or breadth. And I can't make this. I'm just going to take this off the screen for a second. There are 2,000 stocks in the market, right? This works like a it's not really like a temperature gauge or how hot, or it's like your RPM gauge in a car. If the market is a car that you're driving, negative 2,000 is as low as you get on this bad boy. This reading, this you cannot see it. It's right here. I mean, it's $ADD. This is a specialty feed in Thinkorswim, though, just so you guys know. It's not something that you can pull up in your Robinhood or your Webull or anything like that, but it's advancers minus decliners. How many stocks are advancing versus how many stocks are declining? 2,000 negative, which is where we are. That's as low as you go. And so like shorting today, why I'm super like hesitant to say, okay, net new shorts. This is the definition of what you would call shorting the whole. Have you ever heard that before?
Yeah.
You have? So this is shorting the whole. I mean, this is, we're going way back. This is as low as you go on breadth. So I think that we are set up for a solid bounce. But is that the bounce that really takes us to the promised land, dude? You know, that's what I cannot say. So negative 2K, advanced decliners, that's a bit much. You're egregious. You're a greedy bear, greedy bear if you're trying to short that. On the flip side, this is something called vol D, or volume. Like, this is what I call net flows. Is volume increasing to the upside? Do you see more selling action? Do you see more sellers than buyers? We have not peaked on this right here. And this is for SPY, by the way. There's different ones for Qs. There are different ones for IWM. That's why you saw that big grid on my screen before. So this can actually get pretty deep. But again, if tomorrow's selling action in at least early morning is not this deep, if it stops somewhere around here, I mean, honestly, this is probably going to flip pretty quickly into earnings season. So, while it looks bad, I'm not inclined to press massive shorts here. I think that would be shorting the whole. But at the end of the day, I mean, this is not the point to panic. This is not the moment to panic. This is a moment to, like, okay, take a chill pill, expect some bounces, and don't get caught up in the, oh my God, we're going back to the highs, because we're not. Think about it like, okay, what do I need to do to rebalance? Because it's probably going to be a K-shaped economy for a while. There are going to be a lot of outsized winners, and there are going to be a lot of outsized losers, at least for the middle chunk of the year. And where do you want to rebalance, or do you just want to have cash because you're a growth stock investor and I want to be able to buy the dip later?
Also, to your point, the last time we had 2 back-to-back negative 2% days was, if I'm not wrong, November. But what happened then was a continuation of the liquidation event. And then October with the whole soybean stuff, like, I know the Greenland thing is a big deal, but unless Trump says something new tomorrow that the markets haven't priced, because I guess we 2% at least we priced in today, then maybe, to your point, we don't have to V-shape, but we can relax.
I think you definitely relax. Like that video clip from the beginning, dude, it's a kind of a joke, right? Like, if you really want to learn stuff like that, come over to the School of Gains and we'll actually teach you stuff. But like, yeah, in the meantime, this is choppy, but it's so close to being at the point where I'm going to expect to bounce. Like I said, tomorrow we have a bloody red open that starts to get bought up somewhat early within the first 30, 45 minutes. I'm probably going to be buying some stuff, at least from a trading perspective.
Okay, real quick before we do SoFi, let's get a quick update on this Netflix call and the Warner Brothers. Then we'll get into SoFi.
There's on the conference call just now, executives updating on the Warner Brothers deal. Take a listen.
We're working really hard to close the acquisition of Warner Brothers Studios and HBO, which we see as a strategic accelerant. And we're doing all this while we're driving and sustaining healthy growth. We forecast 2026 revenue at $51 billion, which is up 14% year on year. It's an exciting time. This is an exciting time in the business. Lots of innovation, lots of competition.
Co-CEO Ted Sarandos, along with his co-CEO Greg Peters, also weighing in on some questions about the integration of the two companies, saying they're enthusiastic about Warner Brothers' theatrical business. And when asked about pricing as a result, changing pricing as a result of the deal, they said there is no change to their approach on pricing for Netflix. They also said they are confident about the deal getting regulatory approval. Sarandos just moments ago talking about what a big rival YouTube is. So that's sure to be part of that argument to the Department of Justice. Back over to you, Melissa.
All right, that's Netflix. SoFi, what are we thinking?
Netflix chart. Okay, so by the way, if you guys want to learn how to do earnings after the fact, you got to put a line on this 82.60. That's the lows so far, and then 84.36. If you're over that, then you're back this way. Otherwise, you're back down this way. Get out of that box. This is your box. Looks like a shoe.
It does look like a shoe.
Did I draw a shoe? SOFI.
I think this is my piece on. So I think we get 30 on earnings. I really do.
Oh, you mean after hours that opens up at 20 or what?
No, the pre-market. I think pre-market Jan 30th. It jumps to 30.
Okay. What are you going to do?
I'm gonna look at my gains if it goes to.
Are you gonna?
I mean,
The
I do have a
question
lot
is
of SOFI, so I'm probably gonna trim a little bit at 30. I do have a. I probably
after hours though, right?
No, I think a pre-market. I think on earnings because earnings was on
Dude,
30.
is it in the morning?
It's always in the morning. Yeah.
It's not always in the morning.
Always, yes,
I'm
they do. They
old.
always do in the morning. Noda wakes up at 4 a.m. in California.
Dude, I wake up at 4 a.m. in California. I call that guy. He doesn't answer, so I don't know what you're talking about.
Maybe they
It's
should.
not always in the morning.
But it's
Anyways,
always in the morning. I've covered this company for 3 years. It's always in the morning.
okay. Well, anyways,
Just
so
tell me
maybe
it's going to 30. That's all I care about. Give me something good here.
$29.03, big dog.
It's not horrible.
Yeah. So 10 cents, $29.10. So I would take this January 5th high and I would zoom in on it. And what this is, there's something here called an inefficiency, this big giant flusher candle that was preceded, by the way, by a big giant green candle that ends up being fake. There's liquidity trapped in between here and here. So up to 20, in between 28 and 29, there's a lot of people. Oh, they got some of it. There's a lot of people stuck, or there's market participants stuck. And when I see something like this, that tells me that, yeah, that's actually very possible. We do this all the time for all tickers. But when I see something like this, there's, if the market considers like this area fair value between 27 now and the prior fair value was up over here, 31 is possible, but I got to get through that 29 first. In the meantime, we are actually at support. So if this is your fair value, we're actually slightly below this area right now. So this is another one actually, dude, where if you have any kind of red open that starts to get bought up, it's probably going, dude, some of this stuff looks like it's setting up for a pretty strong intra-week bounce that could be fairly deceiving.
Yeah.
For real. So 2906, I see for sure. There's another one that's similar at the 32, but but one step at a time. We got to get through 29. But you're at support, near-term support.
Rocket Lab.
Didn't even look at it today. So not worried, but okay. I probably should be. Yeah, I probably should be. This is not a fun candle.
7% down.
Well, it was. So right now, the Lab of Rockets, dude, I mean, so close. I was waiting for my screenshot of 100. I mean, $99 and like 50 something cents.
Yeah, they teased it.
They always tease it like that. But hey, this is already a win. This is already a massive win. I don't think that you need to do much here except maybe take some profits. But yeah, what's going on right now is that this is my first target. So like if this is the consolidation here, you remember when I need to get, somebody's got to send me this video clip of when we're like buying $38 and some odd cents right here.
No, I remember you. This was the biggest dip buy that you.
Yeah,
had.
and you're like, why? And I'm like, because it's a triple-digit stock, and like we're so close, but we're at targets. So target acquired. This really needs to get back over 92 and call it 93. If it's inside 93 and 98, that's constructive to me. This is a reversal day setup, straight up. But it's a reversal to like 80s, which is still probably not a huge dip buy. I would get interested again if I saw the 60s. But I think this one is kind of like gassed out. Is that a thing? Target acquired. You got to let this bad boy breathe. Big win. Huge congrats. And do we have any Rocket Lab millionaires, newly minted Rocket Lab millionaires in the chat?
I'm sure, I don't know if it's all millionaires, but I'm sure that, I mean, a lot of people have done well in this stock. This stock has been incredible. But to your point, it's obviously, I mean, it's a $50 billion company, you know?
Yeah.
It's got hot.
It's hot. It's hot, but it's also, from a trading perspective, trade complete.
Yeah.
Oh, somebody's on my Celsius. Oh yeah. So Celsius, perfect example, not something I'm trimming, right? I said I was going to buy Celsius at $30 or whatever it was. I bought it. That was my most recent, like successful, big success, great success dip buy. Not selling that. I don't think that's done. But it's also in a different sector, right? Whereas like some of these high growth, they get hot, they run hot, they overheat a little bit. Consider this slightly overheated, so you gotta, let it cool down for a bit. You can check in around 70s, but probably closer to 60 is more of a reasonable dip buy, and retest this general area over here.
NBIS.
International, still kind of concerned here. We're not breaking out, so very much in consolidation. I like this. This is like my only NeoCloud exposure, but also I know this is at risk. I still have this text emit at 59, still on the table. If this is below 80s, I'm very positive that we're going to see the 60s. So what that all means is that this last dip needs to be it, and I want to see this hold 95. If this can hold 95, I'm super constructive. Last Tuesday, we said 108. Again, similar to Rocket Lab, 108, target acquired. But what we need to see once we see a target is, from a trading perspective, I have to see continuation, and I have to have a new reason to get long. And that would have needed to look like this, and then possibly that. So while that is eventually, whenever this gets up here, something I need to see, this is going to be a tradable range. Between now and then, I think that we can see this pullback. And what I want to say is, did I say 95?
Yeah.
That's probably too high. So on a stock like NBIS, it's high beta. You need to give it a little bit more breathing room. Let's say 87.5. 87, like 87s, low 87s. I can see this pull back to low 87s, and then I need to see buyers step back in. And then if this is the case, cool. And then I'm going to have to see something like that. Otherwise, it's just a basic pullback. But if I lose that 87, I'm closer to something like this. But inside of this area right here, generally speaking, a no trade zone. So I would absolutely not touch this between 87 and 80, and just let it show me where it wants to go next. Because this area in this gray box, it's where I wouldn't touch it. I would just, this is like monitor. I'll watch you. What are you going to do next?
IREN.
56 was target last week. We hit that. Same thing. So, I mean, good bounces off the lows and targets acquired. So this is, I mean, lesson in trading. Trade complete. We are, look, you stack these trades, by the way, dude, one after the other. I mean, even from here to here, it's
massive move. Yeah.
70%. You don't get that in the S&P over a decade.
Yeah.
But this is trading, compounding, like compounding with trading. Yeah, I think you have to take that profit unless you're back over 56s, which is what I have to see. So between now and then, I could actually see the 42s again. I can't believe that's 70%. Is that really 70? That's ridiculous. I bought a stock too, like the other day. It was almost like that, like a penny stock. Yeah, so I'm getting this 42.25 type range for potential pullbacks, really at the lower end of this range.
The other thing is, a lot of these data center names, like an IREN, I mean, I don't think they've had some massive deal happen since November. It's purely been, I think, a technical move higher, right?
Yeah, yeah. I mean, I'll be honest. I've never been a big fan of these in general, but yeah, this. I mean, it's a huge win. Maybe some IREN and Cypher millionaires in the house, possibly. But I have to be really concerned that this is a structural break, right? So we have a little double top. Oops, what just happened? If like this is my high, then I have to be really like kind of aware that this could be a lower high. And if that's a lower high, then I'm probably going to be going somewhere. I can be long, like that consolidation here. This is the last low. And the biggest concern is that this is kind of, so the question becomes, is this more of like the beginning of a, oh my God, of a trend breach, or is it going to be some kind of consolidation? So you're in here. If this is like this, your breakdown is that 42, which is why 42 here is like, that can get down to 42, probably 46s, but in that gray box that I just kind of outlined right here, I mean, that's this guy. That's an important level for something like IREN to hold to. And for right now, I think that this does at least revisit that general area, and then you see. But for right now, this is a profit-taking spot from a trading perspective.
Micron.
The cow. Moo. This is such a fat cow, dude. I don't know. It's crazy to me.
Could you buy this chart?
No. I mean, without a fundamental valuation and target, dude, did you know that memory chips are more valuable than gold by weight right now?
Really?
Dude, look it up.
I did not know that.
Like if I had an ounce of, I feel like they're about to be. I'm guessing. I don't actually know, but somebody should look that up. Somebody in chat, just GPT. Are memory chips by weight more valuable than gold? Because that is like where I think we are, and it might be true. Like it legitimately might be true. But yeah, it's a K-shaped. Here we go. Do they have a moat? See, that's the reason. That's where I'm like, do they have a moat? They never had a moat. The moat is scarcity right now. But 330 is a double from that consolidation. Just under 400 is where we go next. We're halfway there. This has to hold 365. If the market gets crazy heavy, then expect this to come probably back down to 300s. But you also need to, what am I saying? If you're in a name like Micron, you're very accustomed to this kind of volatility, and to see it down 10% in a day is not going to be that big of a deal. But we are at targets, like another target spot in terms of like extension, where to sell. This is from this breakout. Second to last target. Last target is 400 or 398, which you're really close to. So it's a crazy one. This one is one where like, if it was a red day, I would not be buying this one. You just need to see this continue. Like this one, you don't really want to see a break in the trend, because like here's your channel upside. And let me just make that you probably can't see that. But it's here, right here. And it's respecting that general trend. And so this is the channel that Micron sleeps in right now, which means that as long as it's staying in this channel, little dip buys to, what is that, 350, 340, just under 350, can quickly become like rippers up into that 398, which is what I'm saying that upside target would be for the next extension. So I could see exactly this situation on Micron also. Western Digital. So what I am saying is like Western Digital has not made it, has not done this full extension yet. It's at the double, like doubling from this one. But you can look at the cohort of them, right? Like, is the whole group? What is that?
By the way, Bitcoin is getting nuked right now. Let me just pull up the chart.
I really don't. Can you do some TAO? This is the chart that you.
Okay, let's just go to Bitcoin. I was going to transition to Bitcoin anyway. Let's.
Yeah, I don't like it, right? I don't like the crypto space. I don't like what I saw this weekend. I'm just telling you guys, when you see it,
let's put 5 on the clock and let's properly do Bitcoin. What are you thinking on this one?
Wow. Really gonna put me on the spot, don't you? So okay. Biddy. So this red box here, that was that prior resistance area right here from that breakout. And we talked about this, like it has to get over that level. And then I can be like, all right, well, we have something to talk about. What I saw over the weekend, I think it was, here 95s. That should have, if we could have held that, this is that volume profile here. If we could have held that, we should have seen that 108 anyways. It's not off the table, but when I see this first blip, especially on like a Saturday breakdown like that, that's not viable to me. That's at resistance, meaning like, so what I did was I took this, let me get this thing out of here, fixed range. So I can just take this and draw it across here. And that actually gives me what we call a volume profile. And like, you really can't see this, can you? So buyers and sellers there. So I just took this profile here of buying and selling. And if I think I can make this extend right. Boom. So that takes me all the way across from there. See that 95? I just didn't like that. It's right over here. So that's the one that's kind of like bothering me, because all of this, just this general profile, sorry, it's probably really bright. It's just resistance. Like I'm just looking at something that rallied from the lows off this near-term support into resistance. We're at least going to see this. But because Bitcoin never hit my downside target, I kind of feel like that 70s is still on the table, dude. So that's
nothing is getting this thing to do. Like geopolitical uncertainty kind of should be decent. Nope. Rate cuts. Nope. Like
yeah.
It is one of the most confusing assets this year.
Yeah. This is your warning, right? Like you get something like this on a Saturday, or what is this, Sunday?
Well, this is when Trump announced the tariffs on Greenland.
Okay.
Right? This was that, guys? Was that? This was Sunday. Yeah, I think.
Yeah, this is Sunday.
Oh no, it was after the tariff thing then.
Yeah, well, whatever it was, that's liquidation to me. So here I'm seeing, we call this like a kill candle, this situation. That's liquidation. You get some kind of buyers. Your buddy Tommy is going to come out and say there was another bot, or what did he say it was?
Glitch, bro. Get the word.
Another glitch. You got another glitch right here. That's a big glitch. That's an equally. What this glitch is, dude, it's everybody that got long into here selling. So call it a glitch, call it a sell-off, call it a consolidation. It's not gone anywhere. But me getting to that 108 again definitely has to put this on the back burner. Really on the back burner. To the point where like I'm still just not. It would have been cool, but I'm still like not super interested here. even if this holds, I'm not going to be interested here. So,
where do you think it's going short term?
Short term, 78
That's not going to be good for Hood or Coinbase.
is my point.
Yeah.
It's literally my point.
Oh my gosh.
Yeah.
That's so funny, dude. This freaking magic
Like
money.
this, right? But dude, this whole setup, even here, if Biddy's gonna go at this point after so many attempts and failures, it's like the ETFs are not enough.
Bro, but Tom said,
dude, I don't care what Tom says.
No,
Tom is a
Tom
noob. Tom is a rookie noob.
He said 150 end of this month. So should I trust you? Or should
I don't know, man. I mean, the last time I sold the stupid thing was at 15,000. I mean, the last time I bought the thing was at 1,200. So, like, you know, whatever. I'm not a noob. I'll tell you that much. Not a crypto noob. I'm done selling, but you know, it's gonna have to. If there are a lot of people like me, let's just put it this way: if there are a lot of people like me that have made a good amount of money on crypto, and I think it's fun and cool to see everybody getting excited about it. But dude, there are probably a lot of people just like me, you guys, that are like, huh, it's not interesting to buy it. And like, you know, what do I need to see? I mean, you'd have to show me 30, maybe.
I know one person who's bought Bitcoin since like $5, and he has a lot of it. And
yeah,
I remember 2024, he started selling, and it was really funny because one day a lot of people started realizing wallets from like the decades ago, or not like a decade, 2010 started selling, and it was one of the wallets was him liquidating stuff, and he was just like, dude, like I bought it at 5, it's at 75. Yeah. And so to your point, you might have a lot of OGs saying, you know,
we're not really interested, guys.
Yeah.
I don't know what to tell you. But no, it's not because of tariffs. It's because you got a lot of people with tens of thousands of Bitcoin in wallets that are off chain, kind of cold, and with cost basis at, you know, $1,000. And
at some point,
you're not bringing that on chain. No way. I'm not. I can't. It's a pain in the ass to sell, right? I probably shouldn't say this, but like, I'm not sending that to an exchange. Like, it's not happening, right? Yeah. Like, you're not going to get me associated with it.
But see, the other problem with Bitcoin right now is that like the sort of diehard thesis has not played out over the past 7 months. Like everything that should be happening that's conducive to Bitcoin going up.
But it's not a diehard thesis. It's a noob thesis.
That's my point. My point. The Lynn Aldrin's Broken Money book, right? Everything that's been happening over the past 7 months should be sending this thing higher, and it's not. So I think you might have some disciples of the Lynn Aldrins of the world saying, screw it, maybe the thesis is wrong, right?
I don't know that thesis, but I will say...
Essentially, the thesis is the debasement trade, basically. That we print money, therefore Bitcoin should go higher.
Oh.
And gold has been the beneficiary.
I don't really believe in debasement as a thing.
I mean, a lot of Bitcoin people do. I mean,
yeah, like there are a lot of people that do, no question. Get off my screen, this crap. But it's not I did this, right? I believe in this. Financial repression, which is different than debasement, but you guys can screen cap it, whatever. It's like debasement, but it's not, right?
Yeah.
This is very much into interest rates and things like that, right? And there's one thing that can take all of that out, right? And that is like the AI tech boom, right? So like this and this right here is kind of at the center of everything that we've been talking about, that we will continue to talk about for a while. And that is, unless what happens in AI really pays off, then yes, the debasement trade, but it's really about the Fed and the government balance sheet. Unless AI has real productivity, that's the one thing that has to happen, right? If we start to see the real productivity in the AI names all the way down to the software sector, debasement trade is out, right? You get out. And the only reason I really went into the weeds on that is because I pulled my silver out of the safe.
We have massive deflation if that happens, which is good.
Yeah.
Okay, can we look at Ethereum? Or are you seeing the same pattern on that?
Well, yeah, I am. So Ethereum, I said we go to 6. I said 35, right? I think I missed it by a couple pennies, but I'm sorry. Did I miss it by $100? Wow.
Are we at 2,700 right now? Hold on.
I was pretty off.
No, we're at 2,940 right now.
Okay, we got 3404, so I'm my bad. I was thinking 35.
Oh yeah, that's what you thought it would get. Yeah.
So this is here. This is still very much in that consolidation, but if we go any lower, I mean, it's not even that if we go any lower. We have the same kind of thing, like this setup. It's 26 and a quarter here was that last. Here's the deal: 26 and a quarter here, from here to here, those are trade. You can't hold 31. We're coming in the summer months. Crypto does not like the summer, guys. Just if you didn't know, not typically, but that seasonality, throw it out the window. I don't really care. If we can't get back over 31, like 31.75, a liquidity grab. See this right here, 1850. Do you see that?
Yeah.
Let me pull it up to the top middle of my chart. It's 1850. And it was like, oh, blah, 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 blah. Dude, 1850 is this area. And no, I don't like BMNR. I wanted to see it bounce. I don't think it's going to do it. After this liquidity event, I'm not super bearish. I'm not selling anything here, but I'm not going out and buying it either. All of this right here, right now is very much like, okay, pump the brakes, chill for a minute, and let's reassess this situation. We're going to have earnings season coming. We have a lot of shifts in the government happening or to come. Things can get highly volatile. And for me here, 26 was the last buy. I think that generally 27s. We are sitting at 29. 27 is not a lot of, it's $200 lower. That's where a higher low could show up. But in this formation, I'm not so sure it's going to hold. So I'm not even going to buy there. I'm just going to let it do what it needs to do and see where it goes. This is kind of like I put my chips out there, stay the course. Like technically this is still in that consolidation. I haven't broken the consolidation, so I don't want to freak out either here. But I also want to be prepared that if I do get this kind of pullback, 1850s, that's the next spot to look at. So there's two trades. One is a short, and then two is a long. But see how far away I am from either of these? This is my no trade like kind of box. Just let it chill.
Okay.
Or trade like the edges. This would be the edges and expect it to be range bound in that area.
That 1800, by the way, is the exact target that Fundstrat's crypto guy has as well. So
really?
Yeah, I mean, that's the whole controversy that Tom is saying 9,000, the other guy's saying 1,800.
Yeah, but you do, like, people don't realize that we can all be right. Like, it's crypto, man. So, like, I can see this. This is a weekly chart on crypto. Like, if I got to 1,800, first of all, this is clean chart. Here's what is that, 2K? Just that's about 1,800 right there. I think this is actually 1,800. So if I have a buy zone, next buy zone being in here, even if this goes down like this, and let's say that buy zone holds, I mean, I have like, dude, this is crypto, like in a nutshell. And so you're up here. The issue is, even if you got this move right now, even if that was it, you really like have to be concerned about the crypto technical bears that we're going to say that this is going to come back down, because this whole thing is it's a massive consolidation is what it is. So like a massive consolidation could come in here, right? Anything in here, you can have something like that. And then you could be right back, but you still don't want to get super, bulled up, because I think I said this last time, at the end of the day, this is the range. Like that's the range of crypto. And for me to get like really bulled up, I have to be breaking over here. Like I have to be up there. Otherwise, here and here to here. And that's our consolidation. And this is we call this like trading the edges. Trade the edges, long, short, until we break, till it finally gets out of consolidation. But the truth of the matter is that even if this does pull all the way back down, it's just a massive consolidation range. So, yeah, I mean, if you really look at I have a freaking, like, if you really want to go back and buy it at 300 or whatever, at 150, I mean, yeah. But I did say last time to look at the alts, and those did not look ideal. They haven't broken yet, but I would still say defer to this. If these guys start breaking down, it's just not going to happen. We need to see that sentiment off the absolute lows here show up.
Can we do ZETA?
Yeah. Dude, give me an inverse XRP ticker. Is there one?
I'm sure there's got to be one out there.
There's not one, but I swear to God, Amit, we need to release an inverse XRP ticker like tomorrow.
Bitcoin 88.2 right now. Yeah, I mean, XRP is going to get hit. Bitcoin's getting hit too.
Yeah, it's a massive consolidation range.
Yeah, 3K for ETH.
Crypto is like the rawest form of supply and demand. So expect volatility. Okay, sorry, what was it?
ZETA.
Will you? I feel like I'm gonna have to call one of our buddies at one of those like Granite Shares or somebody and put down a check.
Versus XRP.
Yeah. Can we start that?
I mean, I think your boy Will can start that. That's his job, right?
I don't want him. I want it to be ours.
All right. This one lost 24 last week.
Yeah, but it's right there. It's right there. So, okay. IWM, remember the January effect? It's still the strongest across the board, but if we're going to rebalance, I think that also needs to take a break. So a lot of IWM today, or I didn't yet, I have time spreads on there, but these ones I want to take a bit of a breather here. Almost at targets. This was upside target 25. Really close, not quite. But look above, fail. I think, yeah, this is actually, I think this is okay, dude.
I think it's going to be okay as well.
Yeah, so
it's undervalued. That's the most important thing fundamentally, which is what matters to me. And the chart.
Yeah, if your time horizon is 3 to 5 years or longer, but it doesn't take much for a $5 billion market cap stock to go to 10, right? Yeah. It really doesn't. But that's actually a pretty pristine pullback. You just don't want to see this really in the near term breaching 1880, but that's a like technically perfect pullback just under 19. You don't actually want to see that. You don't actually want to get that again. You want this to hold over 20. So that should be generally the lows if that's going to take place. Otherwise, you're back in that downward channel that is outlined here in the white. So that's a break. That's a retest of said broken downtrend, that actually looks perfectly fine. I kind of like this. How K-shaped do we get? You got to do something different, dude.
You want to do FCX? Let's do it.
I'm in this. I do this SCCO. I don't have SCCO, but I probably should. FCX got earnings coming, but and I probably should take a look at SCCO, which is the other copper miner. You're here from this breakout. Look, we are. I'm going to pull this into a weekly. Just saying, it's an extremely bullish chart, like an extremely bullish chart. And just this consolidation area here, if this actually breaks out, cool, then we should see 70s. I can't do, I mean, this is not real because this is, I mean, it is and it isn't, but this is COVID lows. It could be triple digits by the end of the year.
This is the copper miner for those that don't know.
Copper, silver, all the above. But primarily none for copper, yeah. But yeah, this is toying with the big time breakout, like big time fail and big time breakout. Even when this is a daily, if I zoom in, this one closing on the highs, albeit earnings 2 days, couple days. So this will probably bounce into earnings. So you're going to laugh at this one. Oh, SCCO moved their earnings. So FCX is going to go first. FCX is going to move SCCO, Southern Copper. You want to see a wild chart? K-shape, bud.
I know these charts, dude. I almost bought.
Oh, do you?
Yeah, in October I was doing due diligence and I didn't pull the trigger. But goodness, man.
Yeah, my goodness is right. So like we're here. This stuff is just like booming. 200 if that continues. But watch Freeport, I think, this week for earnings. Which I don't know what day it is, but this is going to be interesting. Even if it pulls back, I would actually be interested in a $55 pullback. But I gotta take some. It's had such a big run. I mean, not massive, but like from 40s now to 60, it's 50% since the last earnings report. It's up 50% basically. But it's possibly just beginning. So I don't know that I'm actually gonna take any profits on this. I might just let this ride, but I like this a lot. And so we got to watch what this looks like for earnings.
Okay, so let's officially start rapid fire. So we're going to put 2:30 on the clock. We're going to try to get all the audience requests. We got
lipstick stocks, just so they know. There are certain other stocks that we don't ever talk about. This is not ELF. I guess you could look at ELF. He gives me the first shot on the rapid fire sometimes, or I just steal it, one of the two. This is breaking out. This is your lipstick. You remember your lipstick stock? You don't.
I remember there's another one besides ULTA there. Oh, Estee Lauder.
Estee Lauder.
Yeah.
Maybe we should buy some. Oh. Well, Estee Lauder has a lot of tariff issues, right? And we're not getting a tariff ruling. So what I'd say is if EL can hold, I mean, interesting.
Burry liked this as well, but I think he sold out of it.
Yeah, he's out.
So
90s.
you like ULTA here?
I like ULTA way better than EL. ULTA is just, I mean, this is it's better. This is a thing of beauty right now. But from an annual perspective, look at this. Here's a monthly chart. It's a nice looking. You see like a 12-month chart. I don't know if we talked about this, but it was an outside year last year where we had actually made new relative lows, but closed on the highs. This is a 12-month chart, and we are. This is like, okay, we could see, could be $1,000 stock this year. Very well could be.
All right, so we have a lot of rapid fire, so
Yeah.
we're going to try to keep them literally at 2 minutes 30 each, so we can try to get through as many as possible. I'm putting Jason's link in the chat. So please make sure to follow him, and we're going to try to keep these actually rapid fire and get through all of them. Let's do Google real quick. What do you think about this one?
It looks super heavy. I actually opened a short today on Google.
Oh, wow.
Yeah. 329 needed to hold, gap down, close below the gap, not happening right now. So I think this, if I turn on my SMAs, just the basics. So it's kind of like the last general. So it's one of these, not because I don't like it. I do like it, but it's not holding the trend right now, losing the 20-day. This one was just a simple risk reward to me from a trading perspective. Last month's high right here is 222. And if we're closing below 222, look, I have a breakdown, retest, lower high, gap fill essentially. Can this still be choppy? Yes, but very much at risk to be in the rest right now. I do not have, this is at risk here, at risk of at least seeing this area. There was a ton of stuff longer term. Don't hate me, but if you do get a pullback, it's like 250s, which Amit might actually consider buying over there from a basic pullback perspective. Probably should have had this in the bigger ones, but trying to be fast. We are here, 238 down here. So it's been steep. It's been not corrected. It looks like it's going to get a little correction.
Amazon.
This thing's going to see probably 220s again. Super similar, but again, tomorrow if we have Google and Amazon are not like a Microsoft to me or an Apple. Those are definitive pullbacks. These are ones that are just like, they're a little heavy. They can come back a little bit, but the others, I just couldn't press the bet on this. Amazon, I have calendars on here. You're going to have earnings coming at the end of the month. So again, pre-earnings jitters, I think you see the 225s potentially. If it holds 227 somehow magically and bounces, that's probably going to be good, at least for what may end up being a dead cat bounce. And it's stuck in this range right here as this consolidates, not dead cat like short, but be aware that this is this is potentially a lower high. So you kind of just connect those and say, hey, am I actually at risk? I don't know, but you can get something as big as that on earnings, and it still won't be out of the woods because this is the consolidation here. So lower end of the consolidation, I can see that, but I like it still, not touching it. Actually didn't touch this today. Next.
UNH.
I really am not a big fan of UNH. Earnings. I don't think it's going to move a lot on earnings. Stock. That's really tight. This is not going to go anywhere until it actually reports earnings. So unless you're going to guess on what's going on fundamentally and legally, more importantly, legally, this chart says, don't touch me right now and just leave me alone for sure. It should have gone like you don't have a continuation here. So it's because we have a little double top, don't have continuation. You're actually breaking this consolidation to the downside. Yeah. What was the other one? Sorry.
Adobe software.
Oh, how bad is it going? Is it red or green?
It was pretty red once again.
Yo.
It's just nasty, bro. It's really nasty.
Well, I had 275.
Yeah, and that's where it was in 22, but when they tried to acquire Figma.
Which is probably honestly a good thing that they didn't. Because could you imagine if they overpaid for Figma? Yeah, you got to stay away from this. You have to stay away from that. And what are we talking about, Adobe? Are we talking about short targets? Because this is not a long. Yeah. In no sense of the word is this a long. This is like one of the
320, which is a target I've been seeing from people.
Okay, that's not worth risk. It's a shit trade to 320. You can easily get to 325, 12%. In our stock list, we just looked at IREN 70%. It's not worth your time to get to 320. It's not worth it to me to bounce from 275 to 320. Too much risk.
I agree. Bloom Energy, BE.
Take a look. Holy moly. Dude, this thing, I swear to God, the hell is it doing? What is it doing? It's still holding on. K-shape, dude. I like energy in general. It's so hard for me to chase this or even like add to some of like my PWR or GEV. They look great. Yeah, you stay the course on this. This is risk, high risk, but you might get a little pre-earnings. This one, you might actually get a little pre-earnings run up. 180s, high 180s, low 190s is actually extension targets on this guy here. So it does not look bad. This actually looks decent. As long as it can hold 148, the prior high. Otherwise, you'll lose that. This is actually coming down in short order because it's very high beta to 120s. At which point you could see this, and that could still happen. Next.
Let's do Applied Digital, APLD.
See, I was going faster. Yeah, so in the box, trade the edges really. I think target acquired. You lose 35. I'm showing 33s, but yeah, that's not. This is your range bound. So it's big range. You thought $3,000 consolidation was a lot. I mean, this is a 40% consolidation. I would defer to shorts than over longs on this for right now, but there's no breakout just yet. Around low 30s, call me. I would like to see this, and that would be 1, 2, 3. No, probably not going to do it there. And it'll probably come back. And if you have some kind of attempt on a third shot, after a third shot, then you're probably going to break out into the 50s, but not yet. Cool. Next.
Sorry, CoreWeave.
Decent headlines, but at the targets from last week also, you draw us across. It's from this resistance or support breakdown, you kind of hit it. So at this point, expect a pullback. This one's more interesting than the rest. A pullback here could be as violent as 83s. But if this area holds here and a basic pullback is like this, that's probably going to set you up for earnings. And if that does happen, that's going to look way more constructive. So call me at 83. Definitely not a breakout though.
Intel.
Underrated still, man. I don't know what we're doing here.
I think so too.
I think I just need to plug my nose, close my eyes, and just buy the damn thing.
Me too, but I'm not.
I know, right? Because we're like, oh, it's just going. It's a monthly chart. So 35s is, look, if you're long this, I think I was talking about this in my group too. You got to give this one room to breathe because it's getting a little bit violent, especially coming into earnings on the 22nd. So Intel, believe it or not, is actually historically a pretty big earnings mover percentage wise. So I could see 65s to the upside on a surprise. But if this gets, the thing is that I feel like if this gets down to 35s on a dip, it's probably going to get bought up like that because we want to be long what Trump wants to be long. If you're going to have some kind of thesis there, 35 is the big one. I think near term, you could probably put a stop at 42s. But here's what we're holding. This is where 42 comes from. 42.50 comes from this area right here. So this was that prior support, and we're actually over it. So, I mean, really bullish pullback is the 42s, but anywhere in this box, I think that I'm going to need to pay a lot more attention to it because it's not getting the credit that it's screaming that it deserves right now. It's right at that. It's right there. It's probably going to be earnings viewer. Let's move on. TSM.
Yeah, TSM. But for everyone asking again, if we did a ticker, just click the pinned message in the chat. It'll show you all the tickers we already did. And so you'll know if we did it or not. And then the chapters will be available after the show. Yeah, TSM.
TSM's, so a big pullback today. I think you look at 308s. So 308s is, so these guys have already reported earnings. I think you at least get to 308s. And then if you can't get back over 315s, then in this area. But here's the new consolidation right over here. And what's kind of cool about this is, I mean, you can't see it on my screen, but if this was the top of the prior channel, this is like crazy. If this is the top of the prior channel, that would just be a retest of the top. That's what you don't want to see it lose. Like, you don't want to see this. This is, so basically this is not in any danger unless it's under 285. And then if it's under 285, then it's in danger of 220s. But we're nowhere close to this. This is more in the buy the dip kind of setup, anywhere in here. Again, K-shape. All right, next.
Broadcom.
I mean, she's holding. Ooh, that's an ugly looking day. Yeah, you gotta let this breathe. This is one where this is gonna get very volatile, no question. So what we call liquidity grab could happen down to 315, and then expect to bounce up to 345s. But at that point, that looks like that. There's no long situation here other than a dead cat bounce. The only way this is long is if it's really holding over 350, which is over all of this. So here now you could short, or if it opens really red, and starts to get bought up pretty quickly, it's probably just instant bounce into that 350 area. So you have to play it by ear because this is going to set up to be pretty volatile. But you need this. You need to see this holding 350.
SMCI.
Yeah. By the way, this near-term trend is broke. I mean, it's not anything crazy. Like, this is that, like, way back lows. I mean, the crazy part about this here now is that SMCI, it literally has like zero AI priced into it. I mean, yeah, I guess this is zero AI at 10, because like realistically down here is probably some AI, probably, but you're retesting this area, which is like what we had. It's this consolidation is done and broken. So, oops. So it can get a bounce. I like it structurally, but a bounce can be big. But I even if I get that 43s, this is super volatile. I just don't want to see it below 26s. At that point, it's like no. There's nothing happening here. They really don't like it. Shit, we could see probably we could see a 1 in front of it if it's losing 26s. For sure. You're not over the 50-day. It's nice bounce. It's an oversold bounce, but oversold bounces don't really count for jack in my book. It doesn't mean that they're like the low.
ASTS.
But I think it will have a pre-earnings run up because this is so low. It's just a question of does it hold? Well, Rocket Lab went first. ASTS actually didn't even get close to doing anything similar at a pullback, but ASTS never broke out. Maybe they take turns.
This one ran heavy last Thursday.
Yeah, but nothing like the lava rockets. Nothing like it. I mean, isn't this a different type of company though? Do they actually launch rockets? No, they don't. No, right? They don't. This is communications. So 102 is interesting.
Dude, it's actually outperforming Rocket Lab. It's up 34% year to date. Rocket Lab's up 17.
Yeah, after today's pullback. Yeah, for sure. So I would just say, like, look, you don't want to lose 102. If you lose this 102, then you're a similar type pullback. The issue here is, like, this actually never got to my upside targets of 135s. It got to the 120, but it's got to get over that. Otherwise, I could expect another $75, $76 dip on ASTS. But my cutoff would be that 102, 103, right? That prior breakout. Because if you get this, not to bring up, scar tissue or whatever. Oh, dude, I shouldn't even preface that. But, like, you get that look above and fail. Whereas, like, if this becomes a breakout and it starts to go like this, ripcord or defend, take measures, whatever you need to do. Cool. Next.
Grab.
Well, this is the one I was referring to. I don't know why you did that. I don't know why you did that. But it would be like this, where, like, you have your box. It looks good, but you don't want to see it lose 6. And then, because over here it's like, and you're back to the bottom of the box, which is where it is. I bought some grab. I don't know what I'm gonna do here. And I have these crazy limit orders for these leapers this guy was telling me about. But I haven't gotten filled on anything, so I don't want to see a rejection around 473s. So over here is, like, that prior consolidation area. And this is, like, this is the full-blown pullback. This is from this low to that high, right in that bullish pullback. So we're here at the low end of the box. If I can get over 461, I can tell you with, like, high probability that we're going to 5 or 499, like, very high probability. But that's all I can say. I can't say anything higher than that, because we don't want to get stuck in that kind of, which is very possible. All right.
Apple.
I took a little profit on the short. Little. So this guy is not doing the bid and ass. So from this swing low here to this swing high, I actually have 228s. What is this from? Oh, that's just a line. I think that's a prior month. So we're close, very close. I think this is a perfect example of the pre-earnings jitters. Like, what am I going to look forward to from Apple? And so actually coming into earnings, this is like we're used to seeing those pre-earnings runs. It's the opposite of that. I mean, it's 228s as a basic pullback that actually retests this prior uptrend. And I think that's going to be close to the 200-day simple. Yeah. So here's the 200-day right here, 233. So if that flattens out, I could see a little breach and somewhere in here. But this was one of the weaker ones across the board. If you lose 228, then it is 215. And that might be during an earnings move, which is basically the last time that I was accumulating this stock.
Iram, thanks for the super chat. Planet Labs. Any thoughts on this one?
I've heard this. What do they do again?
They are a space name. Don't know what they do.
The space name is like Space Crew is still strong. It's the theme. It's another carrying thing. I just like it's so strong. You're like, whoa.
It's either a giant bubble or it's the theme of the year. It's one or the other, in my opinion.
Yeah.
And I don't think the SpaceX IPO hasn't even happened yet, bro.
No. I mean, I would rather I'm going to have to plead ignorance. There are a lot of other places I would rather put money to work right now. Like the Freeport chart is like one of the most beautiful charts ever. ULTA looks good. There's just safety names. If you're growth, this has got to be, the thing is that you have to have a smaller position size with the Planet Labs or even a Rocket Lab because of the volatility, which is like ginormous, or ASTS. They can't really be the same size positions as everything else because of how volatile they are, and you need to give them the room. But I am at targets. That was my gut here, which is I just took this 1, 2, and then 3. We're right there. So this holding 26.55 is fine down here. If you lose that 23s, but 23 is going to line up to your 20-day SMA. I think you could expect a pullback to 23 in the near term, but you're very extended here. And without like knowing the real fundamental backdrop here, I can't really say anything other than that right now. Plus you have earnings coming. Do you? TradingView sucks at earnings. You'd have to look up when the earnings actually are. But this is not typically a setup that you want to go long on here. This is more of a expect a pullback. We call this a two. This is if I were to do this like inverse alt I. Usually a long, I just turned the chart upside down, a long setup from a candlestick perspective kind of looks like this. Like you have your outlets, like the US outlets, you have one big plug, one small plug, and then you have your ground in there. It looks like an outlet. This is the setup that you want to look for to go up. But the problem with this chart is that I just flipped it upside down. And in reality, that's what the chart looks like. So that is actually the setup that you would look for to go not up.
Yeah, that's fair. Someone says right here, space is the most cutting edge vertical and most complex developing manufacturing subsector. They're the most able to integrate AI into manufacturing. I think that's fair. I feel like space has one of the most suitable use cases of AI outside of like enterprise.
Yeah.
Which is why these names are getting a bit.
Someone said Jason liked Roblox last week. I actually did like Roblox. I actually nibbled at just a little. I have to just watch kind of placeholder because 71 was my spot. It might be really dumb. I don't know. But I'm probably going to get that 70 level again. I won't buy this again until I see 67. But when I'm buying this something like this, it's equity and it's I don't ever try to snipe the lows. I did not put like a options trade on this just because I don't have a clean enough setup. But I'd be looking for this to base around low 70s on this guy. Sorry, I just saw the chat. Do you have any super chats we haven't gotten to?
Yes, Boeing.
Oh, industrials, baby. This is not a bad looking chart. I mean, you know me, I like my Boeing. I feel like you could add to a Boeing today. Didn't United report?
Yes.
These guys are reporting. Let me just look at UAL. They don't need to actually work in tandem. So yeah, so that's neutral. That's actually good. Pretty bullish holding. Well, we have to watch United tomorrow. That's a really good looking chart also. If that gets any higher. Oh my. But this is, I don't want to be in high beta, large cap tech. I'll tell you that much. Or just a lot of tech in general. I think this is a thematic thing that we're seeing. But I like my Boeing. We are back towards the highs, but we got earnings like literally at the end of the month. So I have this at 255, and then we're filling this little area in here near term. Otherwise, I have it as at 400s for the year.
TTD. I don't know why people are getting interested in this as of recent.
You guys stop going dumpster diving.
Yeah, I think a lot of people are bottom fishing on this one.
Yeah. I mean, I'd rather Adobe.
And me too.
Oh, this has got a lot of room to the downside. This got a lot of room. Holy camole. Whoa. So unless this is a liquidity grab where like it breaches the lows and bounces up, you don't like this because this is a $15 stock. No, this has got to get over 35 like tomorrow or get out of there. That's a squeeze to the downside. That's an active. I would, if I had seen this, I probably would have taken an active short on this legitimately.
Can we do ONDS, which has had amazing strength today? And got an upgrade again.
By the way, if I don't like a stock and it's your stock and you like it, look, just know that I'm not talking with a fundamental investor hat on at all, right? Like you probably have insight that I am not taking into perspective. This is just trader, like week to week, month to month really is like my kind of style. The ONDS, I think, hit targets. So I first target, I believe. So we were here. Yeah, so 15 was that first target, which is I had this here. And what I'm looking at is Space Crew hanging tough again. So that's that prior all-time high and the 20-day. I think it's okay. You're going to go into a little consolidation. This one is a little harder because it's already in a breakout. And so let's say if we do get a pullback, $10, somewhere between around $9 would be actually a good dip buy to hold, but it doesn't have to get there because right now you're kind of in an active breakout. So it broke out through that prior all-time high, hit that first target, pulled back, and that's a pretty constructive hold. If this continues, you should see 16 and then 18.5.
Okay. OKLO.
The nukes were looking pretty weak in general.
Yeah. Jassy tried pumping them up this morning, but didn't help.
Dude, if we go back, I never liked Jassy specifically. I mean, I like Amazon, but like.
I like Jassy. What's wrong with Jassy?
I had an interaction with his crews back in the day. I mean, he's a bully.
I mean, don't you want to bully as?
Yeah, he's a bully. He's a bully, dude.
And Bezos was a bully.
Bezos was not a bully.
Bezos was a bully, bro.
Okay, maybe a different kind of bully. I didn't play in his space. I played in Jassy's space, like legit. This looks like consolidating. I mean, they're gonna want to try to do something with this. I wouldn't touch this. This can bounce in your face pretty quickly too. It looks like it might want 85 as a pullback, but I don't think this is short right now. Right now, I don't think this is short. I would defer to a bounce on OKLO. Legit. Is that wild? Probably dumb. But this is your breakout, right? Pullback, retest, broke structure. I'm looking for a higher low. It could be anywhere. It could be anywhere in here. And I just don't want to get in the way.
BMNR.
I ripcorded today.
You're out? You sold everything?
Yeah, I'm done. I don't like it. I don't like the crypto. We didn't. I needed that $30 to hold for my structure to. I did. I needed that $30 to hold. I could be wrong. Hopefully I sold the lows, but it's just one where like, dude, there's just so many other things for me to play with that I'm just not into it right now. It's super cheap IV, but I need that structure to be there. Otherwise, it could be cheap IV and I could be short. But yeah, I don't like that. I didn't like it today. It's one where like, dude, I can get it higher, but it didn't continue. And that last breakdown and watching crypto this weekend, I just didn't I didn't like this trade.
No, it's fair. It's very fair.
It's too at risk for me. There's other things I'd rather do.
Yeah, I mean, if you think ETH's going down, then
yeah,
it's getting hit. Nike still didn't get the Supreme Court decision.
I mean, I've not sold it, but I also know it's actually in a down channel, so it's in a downward channel. This is when we're like, okay, if I have some free cash from time to time, I'll buy it. That's about it. But this is the channel that this is living in. This channel is not up. Let's be fair. Just to be completely fair. The channel is down. So, I mean, you can trade the edges of the channel, but that might mean that you have a 57 dip that gets to 65 and then it goes back down to there. And then, but it's you'd want to see it consolidate. I think this needs a lot more time. Eventually, earnings is going to be way later, March, maybe. But I think this is a stock that is not like, it's not like a screaming buy to me, but it's something where if your time horizon is long, again, minimum 3 to 5 years, minimum for investing, I think you're fine. But I think you have to expect a lot of consolidation and possibly some more pullbacks. But this is the general area over here that you're buying. Don't look at that. I didn't take this. I
mean, this one's not done bad this year so far. They are up 15%. Like, it's had a good year. It's had a bad 2025, but I'd rather be long this than HIMS, to be honest.
Yeah, I can see that. I'd rather be long Amazon, though. Also, just, I mean, well, yeah, I at least into earnings, because this has earnings coming. This looks overheated, believe it or not. This looks like it's going to pull back to 50s, like low 50s. So you're right into resistance, right over here. And so I think that is expect to pull back, and then if you get a higher low, then it's more constructive, like this. So not this one, but maybe another pullback, and then try again and see how it goes. But earnings might, tell the story first. Okay. Are we good on time? How's the cadence here?
No, it's good. It's good. We're getting through a lot of tickers. I think we got 10 more left.
Like, if you're not giving it to me, I'm looking at the chat from time to time too.
You're good. Duolingo is a big one people are asking for.
Okay, so EOSE, I think, you got no. So EOSE, no. This is small cap. Expect a little bit of a pullback, but not a heavy pullback like that. And that'll be into earnings. So measure from here to here and kind of meet it somewhere right in the middle, which is what I just swagged. It's about $15, a little bit less. That's a chicken scratch, but I'll give you the real measurement. Boom, boom. How close was I? Right. And then I'm going to have a little there. Confluence. This is that consolidation here. 1487 to 14. Expect that pullback to hold, I think. All right. What was the other one you said?
Duolingo.
Is it 165 yet?
No.
120. Oh, it is.
It's not at 120 yet.
Oh, okay. Call me then.
It's at 148.
Did I say 120? It's going to go under 100.
Well, someone made a video over the weekend saying it's going to become a $10 trillion company.
I make lots of videos, but they're like bait, whatever.
Duolingo goes to 10 trillion. I don't even know what that.
It's 125, and you're in an active breakdown.
Trillion?
Yeah.
10 trillion, bro. I mean, if NVIDIA can't get to 10 trillion, I don't know. Duolingo.
No shot. It would have to be a different company.
to be a different
Like,
currency.
yeah,
10 trillion
10
Zimbabwe.
10 trillion yen, right? Like,
Figma.
oh, ouch.
Dude, everyone hates this chart, but I'm like, it's not their fault. They 5x'd on IPO. That was just the market being stupid. So I think it gets too much disrespect. I don't love the company, but it's down
13
80%,
billion.
but it never deserved to go to 150.
Yeah, I think it's like a 5 billion company, right?
Their market cap is
No, it's 13 and a half right now, but it should be about 5.
I don't know if it should be 5. I'm just like, it didn't deserve to be 40.
No. You want to do it though? Okay. So take this and then we're going to go extension. Just like we're doing all-time highs, but backwards. 28 was first downside target. So 28 is that first little blip. 25 is definitely in the cards. If this is over 29 though, over basically Friday's gap, then you're going to bounce. And you will bounce to a dead cat bounce definitively, not an uptrend. There's no uptrend in sight here. A dead cat bounce to 33, at which point you need to exit stage left. Next. Or take measures. I was looking at this dude and I'm like, do I need to take this down? Like, I like Shopify, but I don't like the chart. This has 125 written all over it to me. But again, I feel like I would be, if I were to short stuff today, I feel like that's dumb. Like, I feel like here, the people can get all bulled up and I'll let them. If it holds, cool. This would be one that's very high beta. I could see this bounce and then, but that's a big range. That's what is that? 140s to 160s, $20. It's tradable. But you're at very local, weak, medium, small support. This is one where I'm saying, like, don't expect this to hold. Don't expect that to hold, but expect it to bounce. Like, you could get bounce, and then if you get a lower high, then you got to look out.
TE. I heard of this one, T1 Energy.
Mm-mm. What are you doing to me, man?
It's what the people want. These are popular FinTwit tickers.
I never heard of TE. It's probably, do they have nuclear also, or is it just coal?
Honestly, I have no idea.
It's right. It's a huge move, dude. It's all
solar and battery supply chains.
Solar and battery supply chains.
Yeah.
I don't hate that.
I think they have I think they have a deal with a hyperscaler, which also helps.
Yeah, I really don't hate that. I don't know enough about but like, I mean, you're from 80, you're 1,000% off the lows, the recent lows. Just, I mean, actually, 837% up off the lows this year. So, I mean, you're asking me to, at targets, if it gets over that 920, I can see 11s. There you go.
Okay, a couple more before we do silver and gold. Amcor.
Silver and gold.
Yeah, a lot of people are wondering what those does.
That's pretty bullish.
I think this one's, it's up 20%. I think it takes healthy dips. I think this thing's going to be.
No, I mean, it's actually, so you're retesting the high.
Yeah, 100%.
Just like ONDS, right?
Yep.
This chart is exactly the same. Right off the 20, you have some consolidation here. Your targets are 65s in the near term, like up in here. You didn't get there. So I think it's still on the trajectory to get there, but the volatility is is building here because nobody knows this name. Then all of a sudden, you got a lot of groupthink between Amit and his buddies talking about this, and everybody kind of piles in. You get a pullback 45, the dip buyers come in, and you're shooting this to 65 eventually, right? You just don't want to, again, you don't want to see that look above and fail, and meaning that you don't want to have this happen below 44s. So that's always possible. But for right now, this trend is fully intact. It's just the channel is actually getting wider. So even if it got something like that, it's still going to be intact.
They also had a really good earnings last quarter. I think they'll replicate it this time. But I agree. Okay, a couple more. VG.
Amit, please ask Jake. What's Connie saying?
Please ask Jason about Basel III.
Endgame.
Do you know anything about that?
Basel III Endgame?
Does that have to do with silver and gold?
No, that's like FLG, SOFI.
No, I know. Yeah, that's a regulatory framework for banks. What does that have to do with silver and gold?
Non-allocated ETFs. I don't know about non-allocated ETFs. As far as I know about it, it's going to be like anything that holds assets under 100 billion or over 100 billion will have like extra issues like regulatory hurdles to climb. So certain companies under 100 billion, a lot of people in my chat are like probably going to be like, you idiot. It's this, that, and the other.
The banks require them to hold the asset. That's all. I see what you're saying.
There you go.
So the ETFs might have to, the paper silver ETFs might have to start buying a lot more of the silver. I mean, I feel like that's starting to happen.
Oh,
That's happening across the world. Yeah. Like if you're investing in a silver or gold ETF that doesn't actually custody the asset, they're going to have to buy it. At a potentially higher. I mean, that's been going on with the miners as well. I'm
super thinking like I should legit I took my bullion out, and I'm thinking I should just go put it back in the safe because I'm not going to sell it, man. But yeah, I mean, targets acquired. So you have to wait. I have to wait for a new setup over here. I like the logic. I think that's worth some DD. That's Substack worthy almost, Amit. If there's a structural. Yeah,
I've been trying to do a silver Substack, but I haven't really done enough research to compile it. But yeah, I should do that.
That's Substack worthy. 790. Look for a pullback. You really want to see that hold. But I sold mine.
You sold VGs? You're out?
Yeah.
Okay.
Well, it was a trade. I had like 30% in like 2 days, dude. What am I gonna do? But yeah, it's better than the S&P. Like most years. So here you're at resistance. This was the last breakdown level, so I expect to pull back. If you look at natty gas, like natty, natural gas was like flying today. And if production comes down on natural gas, that's actually probably going to be good for things like this, the asset price. But this type of stuff, just the same, I think is where I would want to be focusing on, not the high beta tech right now. So I think this actually does pretty good. Maybe I buy it back. We'll see. I need a new setup though.
Lyft.
Is that our boy?
Yeah.
I mean, it did everything, man. Overstay the welcome. We broke down. We're pulling back. Same thing, Rivian. By the way, Rivian, we haven't talked about, but I think this is transition year for Rivian. I think you expect a full-blown pullback potentially. I think they're probably gonna have to raise money again for the Georgia plant, but I think it's gonna be. Look, I'm not for even for this year. I think it's gonna be a choppy road. Any production, like pushbacks. I'm talking about a different stock. I'm looking at Lyft. If Lyft gets back over 18.5, cool. Right now, I don't think you have a lot more to go. So it'll probably bounce again. 1750s, I'd pay attention to it. I don't have anything crazy here except a little bleeder. Just it's leaking a little bit, nothing crazy.
Okay, so Rivian, we might as well do that.
1750, my guy. Yeah, so didn't I need if I was going to see this really go 2023 or 23 is like solid, but I think that people are being ridiculous right now. Like there are a lot of people that are like, oh, Rivian's going to have a doo-doo quarter. Look it. And they're like, because the EV tax credits. You idiots don't realize that Rivian is over $100,000 car. There was never EV tax credit here. Like, sorry, I'm sorry. I'm not buying a Rivian for EV tax credit. But I don't think a Rivian buyer is going to care two poops about an EV tax credit. But I think that probably sets up this pullback. The only thing that matters is California for Rivi, and I will still buy. I might even buy an R2, dude. You still like your Tessie?
Dude, get a Tesla. Why are you gonna buy a Rivian? Like,
I'm not buying a Tesla.
Why?
There's no Tesla that I like, and they're all because the tech it gets aged out, dude. You have to buy Tesla like every couple of years.
You want a car that can't drive itself,
dude? You know, I bought a car that doesn't. You can't. It doesn't do that. Rivian,
you haven't experienced FSD. Once you experience it, you're not gonna
do you know that the R2 is going to be so a Rivian costs $120,000 new right now where I live, sometimes a little bit more, but the R2 is supposed to be like $45K. And then at the same time as this Gen 3 release later this year, there's something called Autonomy Plus coming, which is their version of FSD. It's not FSD, but it's subscription.
You're
right?
going to get bootleg FSD for $120,000.
Hell yeah. Because I don't have to replace, have you, like, go sit next time. I will buy, when are you coming down?
I was supposed to come in March, but I'm not coming anymore in March. So I don't know. But
anyways,
it's your life in the car. You want to trust it. That's
absolute, dude. It's way. I love it. I love it.
You just love the stock too much. That's why you want to buy the damn car.
No. What I'm saying is it's going to be a bumpy ride. Any production delay, the bears are going to just be like, blah, 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 blah. I do also think that, and they might be right. Anything happens with, like, you know, when the Model 3 came out, there's going to be production delays. There's going to be issues. They're still building out a massive plant in Georgia. It's not done, right? Anything like that, choppy ride here. But I'm not there. I'm not here for that type of short term. I think R2, when that finally gets up and going, then you have R3 and R3X coming. Those are really good. And with some kind of subscription revenue, I think the downgrade that Rivi just got recently, that assumed that there were 0 R2 sales coming out this year. Like, what? You have factored no R2 sales? None? Zero nada? Come on, dude. So I think that was a little overblown, and there's a lot of bears out there. But pullback here, I think you should expect it. It's interesting, but look, I got it like a sub 11. I'm just not going anywhere. This qualifies to me for that 3 to 10 year kind of time horizon. So anyways, that's my story. Sticking to it. But I didn't buy a Rivian. I actually bought a Hummer the other day. So I did. So there's that. Because the Rivian, I wanted the R2 or the R3X, and it's not there yet. So I'll just do this other thing right now.
Okay, Oracle.
It doesn't look great. I'm actually actively short this one. Not that it matters. But yeah, similar setup to the rest. Okay, so you're about to, this looks like any lower, this could accelerate further into the 139s or potentially lower. But after this fail earnings, I think that people are definitely going to be scared coming into the next one of what's going on here. And so I would be cautious for Yeah, it was a Hummer EV. Dude, it's so wild. The thing is so fast. It's crazy fast. But yeah, any lower on this, yeah, we're probably going all the way back into the 120s. But for now, it could pull back into the 140s just because people are overly cautious about what might happen on this upcoming earnings report. We are beyond any bullish pullback. This is just bearish. There's no bullish here. This is not a good looking chart.
Okay. Can we do the last 5, but like a minute on each one, and then?
Yeah, I'm not even doing this because I think I've been less than a minute.
Yeah, so let's do the last 5, 1 minute, and then we'll end with the last 5 minutes with gold and silver. Celsius.
Celsius. 1 minute. Dude, this thing is okay. It's actually at one of my profit targets from this recent bounce pullback. Look at that. Look at that sniper entry. I don't even remember. I think I got it over here, 30, 40, just under 40. But we are at the bear zone into earnings of this last breakdown. I like the stock. I'm just going to give it enough room to breathe. I'm not going to do anything with this. This looks good, but I do want to be aware that this is where bears might be hiding out. So this is a target. I'm just going to move I'm probably going to sell it if it drops below 52. But if I did get stopped out of something like this, I'll probably pick it back up because this is 52 right here. I'd be looking for that support to hold, moving forward across the board. And so if I did get something like that, I'm happy with. I just don't want to see a bigger breakdown like that. So that's why 52s, maybe 50s, just to give it a little extra room. But big day today. I'm not going to read too far into that just because that is right into the bear territory and an upside target.
GEV.
I mean, one of the goats, dude. Never sell bucket. Yeah. Never sell bucket. This thing is just, you know how many days this was on the 52-week high list last year? So it was like every day. If you, since you're not answering, play. So this is from this breakout here. I'm like doubling already. So 642.75 is an important level to hold. Happens to be this. That's the annual is what that would look like. That's a weekly chart. So it's super long term. Yeah. I like it. I like it a lot.
DraftKings.
Something happened news-wise on the king of the drafts today. I actually, trading-wise, this broke below. It had a nice little bounce, and I took it off this lows. On my crew knows, like I had an active trade on this, and then somewhere around here, I think I cut it because it was taking too long, and then I locked in this lower high, and I think I stopped out somewhere over here. Do you know what the news was?
There was a New York sports book that showed like 40% less revenue, and that affected Flutter, DraftKings, all these guys.
Yeah, I don't doubt it. Thanks to Hood. I think this space is going to get really weird. So I think you just watch this. I haven't bought it back yet or anything. This is that general support area. But, and at the same time, you're like, this is from this high to here. I'm out of time. But it was a good pullback. I really needed to see it hold 42s, but that last blip was like, too much. So I have to reassess and see what happens from here. But I could easily see this coming back into 26s. But we're coming into March. Sometimes it gets this pullback. You watch it right here. If it gets a bounce, cool. It could bounce, but it's a trade at this point.
All right, last two. AppLovin.
Ooh,
Short report hit these guys.
again, every time I see this ticker, it makes me eat my words, because last time I was giving you a hard time about not letting us keep the trade, and now it's coming back down to where it was. Now I'm not loving it so much. 1, 2, 3, 4. Dude, the beta on this name is just insane.
I want to own this so badly, but I don't want to deal with the.
But we need a bull market, dude.
Yeah.
And we're very toppy. I can't do it. I just
feel you.
can't. I can't do it. Maybe if I see sub 450s below the 200, maybe. But 473 is about the 200-day simple. I would expect that if you got even close to that, to bounce pretty substantially, like that, like from 470s to like $200. But that's just another day in the life of AppLovin shareholder, because that's not even that big of a move on this thing. But yeah, it would have been 2,000. Like it could be $1,000 stock, and this could still even pull back this deep and still do that. So it's just not right now. It's
Okay,
flushing.
do you have one for the last one or no?
Um,
Anything you're really looking at?
Well, I came in, I was not long Netflix. FCX, I kind of went on a tangent on. SPY, I think we see 675s. Google, I think, is at risk. I'm just going through my trades. We didn't look at IWM, and I think we could take a look. So IWM very close to targets. So this is the January effect trade. Look, we got a nice little breakout. Very, very much like here's targets. I am long March 270s, short February 270s. So I have a calendar spread on. I'm thinking I might take that down if this doesn't get back over. So this is one that like across the board diamonds. So we look at industrials, things like that. It's not that big of a pullback, quite frankly. But if this can't get quickly back over 265, I think I take measures here. But if it does, this is like still on its way to 270 plus. So I want to be very watchful on the January effect type situation. This week can tell us a lot. So this is still where I would be focusing on. That's the ZETA, things like that. But I also need to be aware of diamonds and the industrials. Actually, at an index level, diamonds not that great, but holding up a lot better than the rest of like Qs and things like that. So if we get a buyable dip on diamond, like on industrials, this kind of goes into those travel names, things like that. But I think just across the board, it's kind of like Mag 7 super weak is the theme. Meta's probably at risk for that 585, which I missed that buy, but I think it's possible that we see that. But yeah, I think the charts are a little funky right now. And I would just say that it's if tomorrow we have a bloody open red, just remember, you can't stay in full-blown reverse like for very long. Things will eventually bounce, and I would be very cautious about shorting the whole, but a lot of things are kind of at risk. And so I think this is a reassessment week for a lot of things, mostly market related, but while things might look bad near term, it's very possible that we bounce right into earnings season, and a lot of this is headline driven. So we want to be cautious about that stuff.
There is a real world we get a bounce into earnings, and
very, very real. Yeah.
Can we do silver as the absolute last thing?
Oh,
And are you in this trade at all, or no?
I mean, I've had bullion. FCX is my metals trade.
Okay, that's fair.
Yeah, I'm actively long FCX. So
Trump does
silver,
talk tomorrow. Yes.
85. I mean, this is the ETF. This is not the futures.
Yeah.
I've had this measured out for a while. So 85.50 is, again, this is, I can't believe this actually happened, dude.
It's similar to a lot of the growth stocks though over the past couple of years. Oh, you're going back to 2011? Yeah.
Oh yeah.
That's a different animal.
Well, yeah, because like that's the trade. That's if you didn't know, this is the trade. And if we can get through this level, it's like the 120s. I mean, 110. It's. I mean, that's where you are. If it goes any higher, but again, I'm cautious. It's one of my guys, one of our traders, members in our trading group was like, hey, can I do a ratio spread? Something like on silver, you could sell like one downside put and buy 2 lower strike puts below that and turn it and put that on for a credit and have basically unlimited protection to the downside if this breaks down, because it's very overheated, but no sign of stopping right now either. So I can't, if this does get over say 86 at the ETF level, I mean, it's triple digits, but I haven't had a trade available since it was down in this area. This is again also at target. So just cautious, target acquired, but this, for all intents and purposes, this still looks good. I think it'd take a little bit of a breather, but it's not going to break down unless, the silver, the debasement trade, whatever you want to call it. The thing about it is it's actually fundamental. So unless the only thing that can take these down is that like the AI movement is paying off, like the companies are making money, and then there's no need to have that hedged risk. The dollar itself is it's not looking hot, but it's not over, like it's not below certain levels. The one that is actually concerning is the yen. I don't know if you do this, but the JPY, I keep getting these alerts. Oops, I went the wrong way. USD, JPY. This is at the level that has triggered in the past the yen carry trade. We're literally right there. So I'm a little cautious of that. That's potentially a thing. So this thing is concerning right now, but it'll be like jittery moments. Like I think volatility is coming our way.
All right. That is what we got for today. I think we got through about 50 tickers. So try to get through as many as possible. Again, that doc is in the chat. Jason's Twitter, I'm putting this in the chat as well. Again, I will not be live tomorrow for the market open. I will be live for the close, but I'm going to be missing the open tomorrow.
How dare you?
We'll talk about everything Trump said on the close. Trump speaking at 8:30. Look, I don't know if it's really going to affect the markets. He's going to say the exact same thing he said today. I don't think he's budging on Greenland, so I don't know if it's going to have a massive impact. But
do you think that's bullish or bearish? We take Greenland.
This is more political than not. I don't know why we have to be so obsessed with.
Why do we have to take it?
Yeah.
Why can't we just ask for it politely and pay for it?
Well, that's what he's trying to do, but the Danes don't want any money. They don't want to sell it. So now Trump's like, well, I'm going to tariff you if you don't sell it to me. So it's
I'm going to tariff you.
It's become a mess. But
can you drop my Discord link also in the chat? So we opened up Discord for free.
Yeah, so Jason's School of Gains link is also in the chat as well. Jason, again, you can talk about the program.
So this is like my life's work, whatever. If you like trading, it's cool. It's very cool stuff. But what we're doing is we released this School of Gains kind of program that was designed to take you from like knowing nothing to, we call it the apprenticeship. And so you could start with knowing absolutely nothing. And by the end of this curriculum, it's not a class, it's not a session, it's a ton of trainings. You should be able to leave with being able to create your own specific trading system, not mine, but yours, meaning that everything that we do here will be second nature to you by the end of this. So ideally, you don't need me or anybody else, but that is literally what we've built. And the way that we're releasing it right now is that we've broken the initial apprenticeship up into like 4 components: foundations, like you learn all your foundations about trading and investing, then you go into core skills, advanced analytics, and then we develop you strategically as a trader. So the first round has been released. That's called the Foundations track, and it's going to be released like Netflix seasons of a show, if that makes sense. And so the next round of core skills is coming probably within a few more days, and then it'll be more and more and more. But we're talking like a lot of stuff, and taught the right way. Not like you can find on Google or YouTube or whatever. It's like, this is the stuff that actually works. And we fixed a lot of misunderstandings in the technical world as well. But yeah, it's an amazing thing. It took a ton of time. It still takes a ton of time. And then in addition to that, we have our group, which we basically just opened up. So you can come and chat with us, whatever, click the link. And yeah, I'll see you guys in there. If you're not a paying member, that's fine. There's a ton of stuff out there. So we do like free weekly trade plans, free technical like stuff that gets sent in there. But we do also have a team of like 10 plus traders, and I'm live pretty much every day. Voice and video, so you can see my actual trades. Amit won't join though. I tried to get him. I send him these trades every now and then, and he kind of like brushes them off. And then I'm like, see, you remember that, dude?
Some of them I do take.
Really?
Yeah.
I didn't know. I did not know.
Take some of your trades.
But yeah, I think we used to have like this, there's Discords and they charge like this monthly fee. So we're just not going to do that anymore. And we're just like, we're going to move away from that. But anyways, that's what it is. It's very much education focused.
All right, so you can check out Jason's link. It's in the description. Again, if you're really interested in trading, I think Jason's probably the best person to learn from. His Discord as well. That is in his Twitter bio, putting that in the chat. You can join there for free. And yeah, we'll be back next Tuesday. Do we have a big earnings next Tuesday?
I don't know.
No, next Tuesday
I'm available for you even if there are earnings, dude. Just so you know, I've always penciled out Tuesday unless like something crazy is happening. And like,
Wednesday is Tesla, so we're good.
Okay. Yeah. Someone's asking about Miss Cleo stuff. Like, again, I wasn't live on Monday, but jump into the server. The thing is free. You just have to verify that you're human. And then in the weekly, I already posted it. It's in the server.
All right. Thank you, Jason, for 3 hours of your time for free. We appreciate
Every
it.
Tuesday.
Again, I will not be live tomorrow on the open. We'll be live on the close.
What are we looking for, though? Bloody open to buy the.
No,
that
we're
would
looking
be
for
ideal.
1% down and then recovery.
It's not like a blind buy. I just want to see the buyer step in, and then it's going to be like, all right, we got something to do here.
Yeah, agreed. All right, everybody. Thank you. I'll see you guys in a bit. See you tomorrow.
Later.
Bye, everyone.